Yes, people. A very, very happy morning to all of you.
Happy morning.
Thank you so much. So, guys, we're starting with a brand new topic today, which is Accounting Standard 11, which talks about the effects of changes in foreign exchange rates. The name looks very gigantic. Don't go with the name. Very easy topic. Very, very easy topic. So this topic has got no connection with what you've studied in 11th, 12th or foundation. It's a brand new, fresh topic at the intermediate level, right? Can we start?
Yes, sir.
Fantastic. So guys, as always, the first thing that we discuss is the applicability of this accounting standard. Guys, AS 11 is a mandatory accounting standard applicable on all the entities, whether you are a company or a non-company. In companies, we have how many sub-classification? 2. Okay. Who will say after that? I, eh? Who? One is SMCs. Second is non-SMCs. I'm talking in the point of view of applicability. From applicability point of view, companies are bifurcated into 2 categories. One is SMCs, second is non-SMCs. And non-companies, that is non-corporates, are again bifurcated into 2 types. One is MSMEs, second is large entities. This much you're clear? Okay. So whether you are a company or a non-company, for you this accounting standard 11 is a mandatory accounting standard. However, if you are a MSME, means non-corporate MSME, you are exempted from complying with the disclosure requirement prescribed under the standard. All of you know that in every standard, they mention that how are you supposed to disclose certain information in the notes to accounts. So if you are an MSME, no need to follow the disclosure requirement. Sir, apart from disclosure requirement, if anything is there in AS 11, should we follow that? 100% yes. I am an MSME. Should I follow AS 11 in my business? Yes. Disclosure, not required. Disclosure compliance, not required. That apart, every single thing has to be complied with. Got it, not got it? Tell no. Okay. After this, generally we discuss objective of the accounting standard. This time, I've decided that the objective of this accounting standard and the scope of the accounting standard, I will discuss at the end. Why? Because there are certain terms used in this objective which is very new. Even if I read, nothing will go to your mind. So therefore, I felt that let me complete the entire chapter, then come back and discuss the objective and scope. Things will be very easy for you. Got it, not got it? Tell no. Okay. In short, if I have to tell you, in this chapter, we are going to understand what is the meaning of foreign currency transaction and how are we going to record this in our books of accounts. Got it, not got it? Then we are going to understand what is the meaning of forward exchange contract and how are we supposed to do accounting for that in the books of accounts. And third, we'll try to understand what are the foreign operations. How do we impact that in the books of accounts? In the entire chapter, in the 3 topics, this chapter is revolving around these 3 concepts. But what I told is very basic point. There are a lot more detailed insights that we have to learn from this chapter. Can we start now? Fantastic. So in today's class and the next class, my focus is going to be on foreign currency transaction. Foreign currency transaction. Foreign currency transaction. Before we understand what is a foreign currency transaction, we have to first of all understand what is the meaning of currency under this chapter. In the chapter, like currency, word use pannuvalliya. What is the meaning of that? We have to understand. So meaning and types of currencies in this chapter. Meaning and type of currencies under this chapter. Now there are 2 types of currencies they will refer in this chapter. One, very often they will use the word reporting currency. In this entire chapter, very often they'll come across a term called as reporting currency. So what is reporting currency? We have to understand. Second, you'll come across a term called as foreign currency. So we have to understand what is the meaning of foreign currency. If you're ready, I will start. Can you start? Super. So what is a reporting currency? Reporting currency is a currency. Aha. Reporting currency is a currency used in presenting the financial statement. Used in presenting the financial statement. So didn't understand, sir. No problem. That's why next line is given. In India, the reporting currency in which the enterprise presents its financial statement is INR. Simple over a You are a company. You are preparing a financial statement. When you prepare the financial statement, that is trading and profit and loss account, you record the values, no? Sale so much value, purchase so much value, asset so much value, liability so much value. all that value is denominated in which currency? INR, Indian rupees, got it, not got it. That is called as reporting currency. Reporting currency is that currency which we use to present our financial statement. என்னோட financial statement இதுல present பண்றேன் INR-ல. So that INR is called as reporting currency. In India, you cannot report the financial statement in any other currency. நீ டாலர்ல வந்து ப்ரிப்பேர் பண்ணி ஒத்துப்பாங்களா? I am preparing financial statement in dollars. Why? Because I like Donald Trump. பண்ணலாமா? US டாலர் ப்ரிப்பேர் பண்ணீங்கன்னா எவனுக்கு புரியும்? ஏதோ யூஸ் இருக்கா? No. So therefore, in India, if you are preparing financial statement, you have to prepare in INR. That INR is called as reporting currency. That INR is called as reporting currency. Got it, not got it? Tell no. Fantastic. Next is foreign currency. What is foreign currency? Foreign currency is also currency, but it is other than reporting currency. INR தவிர்த்து, if you come across any other currency, then that is called as foreign currency. So for India, INR is reporting currency. For India, US dollar is foreign currency. Japanese yen is a foreign currency. UAE dirham, foreign currency. Euro, foreign currency. Any problem? If an enterprise imports goods from USA, USA stands for United States of America. இதெல்லாம் கேட்க மாட்டேங்க எக்ஸாம்ல. If an enterprise imports goods from the USA, the invoice is in US dollars. The USD is a foreign currency for that enterprise. For our enterprise, USD is a foreign currency. Got it? Not got it? Tell no. Okay. Now that you've understood what is the meaning of currency, what is the meaning of foreign currency, now we have to understand what is the meaning of foreign currency transaction. What is the meaning of foreign currency transaction? A foreign currency transaction is a transaction that is denominated or settled in a foreign currency. It is denominated or settled in a foreign currency. What does it mean? For that, we have given 4 points. First point, purchase or sale of goods or rendering of services, receiving or rendering of services. First point is that. So I'm talking about goods and services. When an enterprise, business buys or sells the goods or provides and receives the services, and the price is fixed in foreign currency. Price is fixed in foreign currency. Now, I want to buy a camera. From where? Australia. Because quality is super. Quality is super. The quality is in such a way that if I put, no, Gora, we are not racist people. Hello. If I put a camera, if I put this camera, that Australian camera, even if there is no light, emoji palichinu theriyum. That kind of camera. Now here so much of light facility we have to do, no? That is an extraordinary camera. So I have to buy from Australia. Tell me people, if I buy from Australia, from Australian party, that is supplier, I have to take a bill. I will take an invoice. Will he give the invoice in INR or will he give the invoice in Australian dollars? He will give the invoice in Australian dollars. The price is fixed in what rate? Will I talk to him? Say, sir, how much rupees, sir? 10,000, 20,000, 1 lakh, 2 lakh? No, he will talk in terms of dollars. Sir, my camera, $15,000. My camera, $10,000. So he will talk in dollars. So price is fixed in dollars. Payment is made in dollars. Everything is happening in dollars. Dollar oh dollar. Got it, not got it? So such kind of transaction is called as foreign currency transaction. If I buy such a camera from Australia, if the transaction materializes, then that transaction is called as foreign currency transaction. Got it, not got it? Tell no. Example. Since you have not got it, example is given. An Indian enterprise import goods from USA for the US dollar 10,000. How many dollars? 10,000. What is that goods? Imagine I'm importing a camera from USA. Australia to USA have changed the name. Okay, not okay? Okay. The supplier of USA raises the invoice bill in US dollars and the amount is also payable in US dollars. Since the transaction is denominated in foreign currency and requires settlement in foreign currency, it is treated as foreign currency transaction under AS11. அழகா explain பண்ணிருக்கீங்க. இதுக்கு மேல டவுட் ஏதாவது வருமா? Tell no. Any doubts? No problem. Comfortable. Can I go next? Sir, only buying and selling of goods, providing services, only if this is called as foreign currency transaction, you are wrong. This is one of the example of foreign currency transaction. This is one of the category of foreign currency transaction. There are 3 more categories of foreign currency transactions. If this is clear, can I go forward? If you borrow money from foreign countries, From Dubai you're borrowing, from Sri Lanka you're borrowing, from where? Australia, US, where are country? Tell me, which country? Japan, Canada, China, Vanda. Istanbul. Okay, you buy from Istanbul? Lending? Achha, okay. She likes Istanbul. If you're borrowing money from Istanbul or you're lending money to them, this is also called as foreign currency transaction. Buying, selling alone is not foreign currency. Even taking loan, giving loan is also a foreign currency transaction. When an enterprise borrows or lends, I have not used the word company because AS11 is applicable to both company and non-company. Both are called as enterprise. So when an enterprise borrows or lends money and the amount is payable or receivable in foreign currency, it is called as foreign currency transaction. Example, an Indian enterprise borrows US dollar 50,000 from a foreign bank. Which foreign? Your choice I gave. Whatever you want to imagine, you can imagine. Whatever country you like, you imagine. The loan amount is repayable in US dollars. Oh my God. How can we imagine, sir? USD have told, no problem. We'll imagine Donald Trump. Now, from USA, I have borrowed $50,000. Which bank? I have not mentioned. It could be any bank. Bank of America. Which now, the loan is denominated in what currency? US dollars. Loan vaangumbodhu enna solli vaangirken? When you sign one contract with the Bank of America, what contract did you sign for? That contract contains dollars. So the loan is denominated in the foreign currency. Okay, wow. Tomorrow if you go and repay the loan, can you repay the loan in INR? No, you have to repay loan in dollars. And it requires the settlement of the loan in the foreign currency, which is US dollars. Hence, it is treated as foreign currency transaction under AS11. So whenever you come across any transaction of taking loan or giving loan, that will also be treated as foreign currency transaction. Got it? Not got it? Hell no. This I will not discuss today. Separate topic I'll discuss in the next class probably. Okay, wa? Forward exchange contract is one of the key component of this chapter. Separately I'll discuss, not today, because this is a little complicated. So I'll discuss when the right time comes. So third point I've kept pending. Fourth point. Acquisition or disposal of asset, settlement of liabilities. First point talks about what? Purchase and sale of goods. What is goods? Goods is something which we buy with the intention to sell, or goods is something which we buy with the intention to manufacture. For the manufacturer, buying of goods means what? Buying raw material for manufacturing purpose. So manufacturer buys raw material. Goods means raw material for the manufacturer. For trader, goods means stock and trade, traded goods. Prida. That point. Second point spoke about loan buying, loan selling. That is loan taking and loan giving. Idhula asset pati edhume mention pannala. I can buy also asset, no. I can buy asset, no. The camera example what I gave, camera for my business is what? Asset. If I'm into business of buying and selling camera, camera becomes my goods. So that is covered under first point. But if I buy a camera, if that is asset, it gets covered in the point number D. Point number 4. Got it? Not got it? So when an enterprise acquires asset or disposes means sells asset, or incurs a liability means taking a liability or settling a liability, and the amount is denominated in foreign currency, then such transaction is treated as foreign currency transaction. Example. First example for acquisition of asset. An Indian company purchases a machine from Germany for EUR, stands for euro. Euro 50,000 euros. Since the machinery is acquired for an amount denominated in euro, I've acquired a German machinery. Lot of textile companies, people, they buy machineries from Germany because Germany machines are very good, is what people believe and consider. So when I buy this machine from Germany, the bill is there. No, the bill will be denominated in what currency? Euros only. So the transaction is denominated in euro and the settlement is also going to happen in euro. Therefore, this transaction is called as a foreign currency transaction. Any problem? And tomorrow, imagine this asset I'm selling to any person in Germany itself. Germany India kondu I'm using in India. Later, I cannot sell this in India. So I decided to sell this back to Germany people only. So when I sell in Germany, Germany people give me back dollars. Sorry, euro. I'm so sorry. They'll give me euros. Euro. Sorry, not dollars, euro. I'll get money in euro. That is called as disposal of asset. So while acquiring the asset, purchasing the asset, or selling the asset, if you get or pay in foreign currency, then such transaction is called as foreign currency transaction. Simple. Whenever you do any transaction which relates to or results into inflow and outflow of foreign currency, it is called as foreign currency transaction. Got it? Not got it? If you're dealing with any foreign currency aptina, that becomes a foreign currency transaction or settlement of liability. An Indian company pays USD 20,000 to a foreign supplier towards the outstanding creditor. Means I purchased some goods. Okay, wow. I did not pay the money. Now I'm going to pay the money. I'm going to pay the money now. Since the liability is going to be settled in the foreign currency, it is called as a foreign currency transaction. Got it? Not got? Any kind of liability which is not covered in point number 1, 2, 3 will be getting covered in point number 4. Got it? Not got it? Tell me, people. Is okay va? Not okay va? Comfortable? Not comfortable? Comfortable. Okay. Now that you've understood the meaning of a foreign currency transaction, now you have to understand next, how do we account them in the books of accounts? How do we account them, record them, recognize them in the books of accounts? How do we pass the entry? Initial recognition of foreign currency transaction. Initial recognition. So what is the meaning of recognition? What is the meaning of recognition? Recording as journal entry in books of accounts. BOA stands for books of accounts. How do we record this in books of accounts? The process of recording the entry in the books of account is called as recognition. Got it? Not got it? Now, there's something called as initial recognition. Initial recognition means what? I've given the meaning here. Initial recognition means recording a transaction in the books of accounts for the first time when it occurs. And the transaction first time நீங்க encounter பண்ணும்போது record பண்றீங்க இல்லையா, அதுக்கு பேர் that is named as initial recognition. That is named as initial recognition. Got it? Not got it? For the purpose of initial recognition, any transactions entered into in a foreign currency, are they talking about any random transaction? I'm buying goods from India, from Delhi I'm buying, from Bombay I'm buying. Are they talking about that transaction? No. That is called as domestic transaction. What is it called as? Domestic transaction. If you buy in India, sell in India, that is called as domestic transaction. Are they talking about domestic transactions? No. They are talking about foreign currency transactions. So any transaction entered into foreign currency means foreign currency transaction should be translated into reporting currency. Translated means what? Converted into reporting currency. Namma India reporting currency is INR. Appona we are talking about dollar to be converted into rupees. Got it? Not got it? You purchase from USA. Bill enna irukku? $10,000. $10,000. You're making the payment also $10,000. Can I account the entry in dollars? Ennoda bookla when I pass the journal entries, purchase account debit to foreign creditor, can I record in dollars? Not possible. Our accounting standard 11 does not permit. It says that all the transactions should be reported in reporting currency. Ana na pay pannadu, na vaangna goods is in which currency? Foreign currency. Hence I need to translate. Translate means what? Convert into reporting currency. How should I convert? Using exchange rate. Using exchange rate. Now what is exchange rate? We have to discuss. Exchange rate on the date of transaction is also called as spot rate, prevailing on the date of transaction. Now this I have to explain, so please hold on. What is spot rate? Spot rate means exchange rate prevailing on the date of transaction. First we have to understand what is the meaning of exchange rate. Tell me, people, what do you understand by the word exchange rate? What is exchange rate? Where are we located? Where are we located? India. I purchase goods from USA. Supplier is located where? USA. Supplier is located in USA. Now, supplier has sold the goods worth $1,000. Purida? Yes or no? Okay. I have to make the payment to him. In what currency should I make the payment? Dollars only. But I don't have dollars, no, boss. Yeah, in India, the business what I'm doing, everybody is giving me paisa in Indian rupees. Tell me, no. Okay, forget everybody else. You gave me fees. Dollar கொடுத்தீங்களா? Which dollar you gave me? Hell no. Which dollar you paid me fees? Australian dollar, US dollar, Canadian dollar? No, you paid me INR. In my pocket, what currency is there? Right now, nothing is there. But imagine if it is there, means what currency it will be there? INR. I have to make dollar ka payment. Poor fellow. How will I make the payment in dollars? Tell me. I want to buy one camera from USA, $1,000. Purida. They want payment in dollars. How do I pay it? Sir, I have to go and buy dollars. To make the payment in dollar, I have to buy dollar. From where should I go and buy the dollar? From where should I buy the dollars? In India, is there anyone selling dollars? Yes. There are authorized agent. Typically, bankers. Typically, banker are the authorized agent who can sell the currencies. Who can sell the currencies. From them, I have to buy the currency. Banker vitta na vaanguven. So I have to buy dollars. Buy dollars. So buying dollars is as good as buying a product. In the product na buy panna enna pannom? I have to pay Indian rupees. If I pay Indian rupees, this product will come to me. Yes or no? In the same manner, if I pay Indian rupees, I will get dollars. So I'm buying dollars. I'm buying dollars. So I give INR to buy dollar. So dollar for me is a product. Dollar for me is a product. Only if I have this dollar in hand, I can make the payment to the Australian party. Yes or no? How much is dollars here? How much dollars? $1,000. In pocket, I have 1,000 rupees. 1,000 rupees. Can you see? 1,000 rupees. I am giving 1,000 rupees. Banker will give me $1,000. Not possible? Oh my God. Yeah. What nonsense you're talking? 1,000. Can you see? I need $1,000. You take rupee 1,000. Give me 1,000. 1,000, 1,000 matching, no? Mukunda. Tell me, Mukunda, what is wrong in this? Inna tappu? You are banker. உங்ககிட்ட நான் என்ன கேட்கிறேன் $1,000. உங்ககிட்ட எவ்வளவு வாங்குறேன் 1,000 தானே? அப்ப நான் 1,000 கொடுக்குறேன்ல உனக்கு. Oh, the ratio is not 1:1. The ratio is not 1:1. Oh. If you want to buy $1, you cannot give me 1 rupee. To buy $1, you cannot give 1 rupee. Rate are not same. Rate is not same. To buy dollar, you have to give more rupee. More rupee. அப்பனா dollar is strong. Rupee is weak. Dollar is strong. $1 வாங்குறதுக்கு நீ எவ்வளவு கொடுக்கணும்? What is the dollar rate today? Check and tell me. 90? 95? 95? Oh my God. 96. 96 rupees. I have to give 96 Indian rupees to buy $1. So who's more powerful? Dollar is powerful or INR is powerful? Dollar is powerful. Got it, not got it. So I need how much? I need $1,000. I need $1,000. Now understand. To buy $1, I need to pay rupees 96. Therefore, to buy $1,000, how much rupees should I pay? To buy $1,000, how much rupees? Cross multiply. This is called as cross multiplication method. Also called as unitary method. Also called as VV technique. Vegetable vendor technique. 3 kilo takali 90 ரூபா. 2 கிலோக்கு எவ்வளோ? Cross multiply. 60 rupees. Got it, not got it. I told you since 11th standard, all the formula that is drafted in your accounting since 11th till CA final, everything is influenced by the vegetable vendor. Got it, not got it. So now whenever you go home, come back. On the way, if you find any vegetable vendor, go and fall in his feet, get his blessings. It is because of this fellow only we are able to crack formulas nicely. Yes or no? Tell no. So, $1,000 into 96 divide by $1. Purida. Tell no. Always denominator will come $1. So in future, I will not sit and do all this formula. Directly, what will I do? You know, $1,000 into 96. How much money should I pay from my pocket now? 96,000. If I pay, I'll get $1,000. So this camera, what I'm buying, is worth how much now for me? 96,000 rupees worth of camera. I'm going to buy. Okay, not okay. Tell no. Online people, any problem? Now, this 96 rupees is there, no? This is called as exchange rate. This is called as exchange rate. Means what? Exchange means what are we exchanging? I'm giving INR to get dollar. So what are we exchanging? We're exchanging currencies. INR with foreign currencies. Reporting currency and foreign currency we're exchanging. For that, what is exchange ratio? 1:96 is the ratio. 1:96 is the ratio. So this is called as exchange rate. Exchange rate. Got it, not got it. Rather, I will say it is 96:1. 96:1. So $1,000 into 96 by 1 in the formula. So the exchange ratio is 96:1. Got it, not got it. This exchange ratio is called as exchange rate. Exchange rate. Now, the exchange rate that is prevailing on the date of transaction. ஒரு பொருள் வாங்குற அன்னைக்கு என்ன எக்ஸ்சேஞ்ச் ரேட் இருக்கோ அந்த ரேட்டுக்கு பேர் வந்து ஸ்பாட் ரேட். வாட் இஸ் இட் கால்ட் அஸ் ஸ்பாட் ரேட்? What is spot rate? Spot rate is exchange rate. Okay, but on what date? On the date of transaction. On the date of transaction, that is called as spot rate. Got it? Not got it? Now come back and read this. It'll make sense. For the purpose of initial recognition, any transaction entered into in a foreign currency should be translated, converted into reporting currency using exchange rate. What is exchange rate here? The spot rate prevailing on the date of transactions. Got it? Not got it? No problem. I have example also. An Indian enterprise. You got it? No. Upon this example, you can itself do directly. Chalo. Entries I will not show. You will do the entries. Okay, I'll just read the question for you. An Indian enterprise purchases goods from a US supplier on 10th Feb 2026 for USD 1000. The exchange rate on 10th Feb is 26. Sorry, 10th Feb 26 was 84 per US dollars. Sorry, 84,000 I said. Currently I said no. Then what? Yeah. Answer. Okay. 84 per USD. Now, journalize. Do it fast. என்னம்மா பயமா இருக்கா? Easy only, no? First question to all of you. On this, AS11 is applicable or not applicable? Sir, in India, any enterprise, whether they are company, non-company, on them AS11 is applicable. So AS11 varum. Why AS11 will come here? Because here the goods which we're buying, no, we're dealing with foreign currency. So it's a foreign currency transaction. So first point is check whether this is a foreign currency transaction or not. If yes, AS11 is applicable. Now that is applicable, no. Do the calculation and the entry. Do the calculation and entry. I'll come to that. We have questions based on that in the upcoming sessions. That becomes very complicated today itself, no? We'll go with base. But ये point covered है जो तू बोल रहा है. That is advance paid to supplier. Okay. Tell people. The goods what I purchased is worth how much dollars? $1,000. To the US supplier, how much should I pay? $1,000. In my pocket, no money is there. So I have to buy the currency from exchange. From the exchange. From the banker I have to buy. Yes or no? Tell me. To buy this $1,000, how much INR should I pay? So $1,000 into 84. 84,000 rupees if I pay, I'll get $1,000 in my hand. And I can make the payment. Okay, wow. What is 10th Feb? Transaction date. On this date, goods are purchased. So on this date, what entry will you pass for buying the goods? Goods purchased with intention to sell. Upon a purchase. So purchase account, debit to foreign creditor or foreign supplier. Yes or no? Pay panla pain no. Inimilla pay panno. It's a credit purchase transaction. Got it, not got it. So on 10/2/26, purchase account debit to foreign creditor. Got it, not got it. So this transaction was denominated in the US dollars. As per AS11, I translated into INR because we have to report in the foreign currency. Sorry, we have to report in the Indian currency. Got it, not got it. So the process of converting dollars into INR is called as translation. What is it called as? Translation. See, today I've not done the payment. I'll do the payment in future only. But for translation purpose, I need exchange rate, no? So don't think that only when I buy the dollars, that time exchange rate I will apply. Exchange rate, when I make the payment, will be different. How to handle that, I'll discuss now. இப்போதைக்கு என்ன பேசுறோம்? நீ வாங்குற அன்னைக்கு, what are you buying? You're buying the goods on credit. You're buying the goods on credit for $1,000. Now, when I record the purchase entry, can I record in dollars? Hell no. No, so I have to convert this into INR. Using what rate? Spot rate. Using spot rate. So when I multiply the exchange rate, don't think that today I'm buying $1,000 in hand and keeping. No. In 1,000 to 84, what I multiplied? No. Only intention behind this is to record this in INR. Got it, not got it. Because purchase has taken place. As per accrual concept, you have to record the expenses when they are incurred. Got it, not got it. Hence, we are recording it. But record panamod, I cannot record in dollars. Hence, I have to translate into foreign currency. Please understand, I'm not making the payment now. Because this is credit purchase. I'll make the payment later. Got it, not got it. Tell no. No problem. No problem? Okay. What we recorded now, this transaction is called as initial recognition. What is it called as? Initial recognition. Any doubt in initial recognition? Comfortable? Now, can I go forward? Next, we are supposed to talk about subsequent recognition on the balance sheet date. So for that, you have to understand what is the meaning of subsequent recognition. Subsequent recognition means reporting or remeasuring. This is the correct language. Remeasuring an item. Which item? Foreign currency item after its initial recognition in order to reflect its value at a subsequent reporting date. So, purila sir. Only with example you understand. Have patience. This is the example of subsequent recognition. Same example. மேல கொடுத்த example இருக்கு இல்லையா? An Indian enterprise purchased goods from a US supplier on 10th Feb 26 for $1,000. The exchange rate on 10th Feb was 84 per US dollar. Till this we stopped in the previous question and we did initial recognition. Now the question further continues. Assume that the amount remains outstanding, means till 31st March 26 the amount is not yet paid. Upon the 84,000 rupees என்னோட balance sheet outstanding liability, will it come or not come? Yes. Now the transaction what you recorded above on the balance sheet date. What is the balance sheet date? Balance sheet as on 31st March 26. This is financial year 25-26. இந்த financial yearல எப்போ வந்து goods வாங்கிருக்கீங்க? Which date you purchase the goods? 10th Feb to 26. Correct? This is date of transaction. Correct? This is 31st March 26. Year end. As on the year end balance sheet, what is the foreign creditor value reflecting? Foreign creditor. Foreign creditor. Tell me people. What is the foreign creditor reflecting at? 84,000. Correct? How sir? $1,000 into 84. This is what you recorded. Yes or no? You record one entry, no? Purchase two foreign creditor. Foreign creditor is a liability having credit balance. Hence it is coming on liability side. Yes or no? 84,000. Now, if I show this foreign creditor at 84,000, are you okay? We are preparing balance sheet as on 31st March 26. இதுக்கு என்ன அர்த்தம்? இந்த நாளைக்கு on this date, what is the true and fair value of this foreign creditor? Yes or no? அப்போ whenever you prepare any balance sheet as on 31st March, whatever is the asset value reflecting, whatever is the liability value reflecting, it should reflect at true and fair value. It should reflect at true and fair value so that it can give true and fair picture. Yes or no? This 84,000, is it the true value? This 84,000, is it the true value? இல்லையே. Exchange rate will change every second. Oh my God. Not second, fraction of second. Every fraction of second, exchange rate will continuously alter. Like how in the share market, the price of a share alters every fraction of second. Like that, the currency rate also will fluctuate every fraction of second. Got it? Not got it? So the exchange rate, what you took 84 is on 10th of February. இன்னைக்கு 31st March, exchange rate will be something else. So AS11 says that if I show a foreign creditor or any liability or asset on this old rate, if I show under old rate, then this value will not be true and fair. In order to make the value true and fair, it is important that we bring it to the latest value. Got it? Not got it? We should bring it to the latest value. That is called as closing rate. So now we have to restate this foreign creditor as on the balance sheet rate at the closing exchange rate. What is exchange rate? INR to foreign currency is called as exchange rate. I am telling closing exchange rate. What is the meaning of closing exchange rate? The exchange rate that is prevailing on the end of the year. The exchange rate that is prevailing at the end of the year is called as closing exchange rate. அந்த ரேட்ல வந்து இந்த வேல்யூ நீ அப்கிரேட் பண்ணும். Means what? If I pay the money today, Today means what date? 31st March. Then what would be my foreign creditor liability? Purida. So on that date, you have to upgrade the value. Got it, not got it. So every balance sheet date, rather I would say at every reporting date, you're supposed to restate the value of the foreign currency transactions. Got it, not got it. I am a limited company, public limited company. We'll follow Ind AS. You will prepare balance sheet every quarter. So every quarter, you're supposed to restate the foreign currency transactions. Got it, not got it. ஒவ்வொரு பேலன்ஸ் ஷீட் டேட்டுக்கு நீங்க என்ன பண்ணணும்? நீ வந்து உன்னோட ஃபாரின் கரன்சி டிரான்சாக்ஷன் வந்து on 31st March or on the balance sheet date என்ன ரேட் இருக்கோ அந்த ரேட்ல அப்கிரேட் பண்ணும். Got it, not got it. Tell no. 1 second மா. So 31st March வரைக்கும் பேமெண்ட் பண்ணல. The exchange rate on 31st March 26 is called as closing rate. அன்னைக்கு என்ன ரேட் இருக்கு? 86 rupees. That day what rate it is? 86 rupees. So in case if I go and pay money today, how much dollars should I buy? $1,000. To buy $1,000, how much should I pay from my pocket now? $1,000 into 86. அப்போ 86,000 rupees pay பண்ணணும். புரியுதா? Am I giving 86,000 from my pocket and getting dollars? No, because this is credit purchase. On what date I'll give INR and get dollars? On the date of payment. Payment பண்ற அன்னைக்கு தான் நான் INR கொடுத்து டாலர் வாங்குவேன். அது வரைக்கும் நான் கன்வெர்ட் பண்றது only for books of account purpose. Got it, not got it. So had I made the payment on 10th of February, how much money would I have paid? I would have paid 84,000 INR. Till 31st March, you have not paid the money. Just in case today you're going to pay the money, dollars aptina, how much money INR you have to pay? 86,000 to the banker. So banker will give you $1,000. With that $1,000, you'll pay the money to the foreign creditor. புரியுதா? இப்போ நீ பேமெண்ட் டிலே பண்ணல. From 10th February to 31st March, delay is there. No. Because of this delay, are you going to pay more or pay less? Pay more. நீ 10th Feb காசு கொடுத்திருந்தீனா, had you made the payment to the foreign creditor on 10th of Feb, you would have from your pocket, how much money would have gone? Only 84,000. As on 31st March, if you're making the payment, how much money would go from your pocket? 86,000. So is it going more or less? More. This more is how much? 2,000 rupees extra it is going. This 2,000 is called as foreign exchange difference. Foreign exchange difference. Difference dane. How did I get this 2,000 rupees? It's the difference between closing rate and spot rate. Difference between closing rate and spot rate. This is called as foreign exchange difference. Foreign exchange difference. Okay, not okay. Tell no. No problem. I'll come to your point. 1 second. As per paragraph 11, para means point 11 of the original accounting standard 11. Since the foreign creditor is a foreign currency monetary item. Now what this is I have not explained. I'll explain sometime. This foreign creditor should be restated using closing exchange rate. Why? Because the amount payable is still outstanding as on the balance sheet date. Purida. If I don't restate it, then 84,000 liability is a wrong liability. Purida. It is a old liability. Inni got a new liability in 86,000. So you have to state the value at the new liability so that the financial statement can become true and fair. Restating it at closing rate ensures that the liability reflects at current value in the reporting currency as on the balance sheet date. Clear or not clear? Now, tell me people, what is the journal entry for initial recognition of the foreign currency transaction? Initial recognition means what? On the date of purchasing goods. On that date, what entry did you pass? Purchase account debit to foreign creditor. How much? $1,000 into 84. This is called as initial recognition. AS 11 says that apart from initial recognition, you also have to take care of subsequent recognition. What is subsequent recognition? Restating the foreign creditors as on the balance sheet date at the closing rate is called as subsequent recognition. So what is the journal entry for recognizing the exchange difference in subsequent recognition? $1,000 is there, no? How much is the closing rate? 86. How much is the opening rate? 84. So how much is the extra money that you're paying? 2,000 rupees. This is rupees. So 2 rupee into $1,000. How much it is? 2,000 rupees extra you're supposed to pay. Is it a gain for you or loss for you? You pay extra, is it gain for you, loss for you? Loss is nominal account. The rule of nominal account is debit all expense and losses. So exchange difference in bracket loss account debit 2000. Okay, not okay. This 2000 debit, okay. Where will you give credit? This extra money 2000 to whom should I pay? Foreign creditor. Yes or no? Increase in liability, to whom will I pay this money? 10th பணம் கொடுத்திருந்தீனா 84000 கொடுத்திருப்பேன். இன்னைக்கு எவ்வளவு கொடுக்கணும்? 86. யார் கொடுக்குறீங்க? You will give this money to the banker and banker will in turn give dollars to the foreign party. Got it, not got it. So increase in liability. So to foreign creditor. So what party have credited here? The same party have to credit here. Got it, not got it. The moment I pass this entry on 31st March 26, in the entry pass panna odane, what will be the impact of the balance sheet? What will happen? 2000 will get added to this. 2000 will get added to this. Now, the foreign creditor liability becomes automatically 86,000. Because when you did the initial recognition, 84,000 was recorded. Because of subsequent recognition, the exchange difference got further debited or credited to the party account. Hence, in this case, the party account got increased by 2,000. So, what is the total money that you owe to the foreign creditor now? 86,000 in INR. Dollar, 1,000. Bill is not changed. But the currency translation value got changed. Got it, not got it. Now, sir, this exchange difference, where does it go? Where does it go? It will go to your profit and loss account. It goes to your profit and loss account. So, this is called as a closing journal entry. All of you know what is the meaning of closing journal entry? Is there anybody who does not know what is a closing entry? All of you know what is a closing entry? All the nominal accounts at the end of the year should be closed and transferred to the trading and profit and loss account or profit and loss account. Harini, yes or no? Yes. So what is my closing entry? Foreign exchange difference is currently in debit. To create it, debit. To close it, credit. So I put in credit. So instead of this, what will I debit now? Profit and loss account be debited. So 2000 is the exchange loss, which is transferred to the profit and loss account. Got it, not got it. This closing entry is done as per para 13. Which para? Para 13. I will tell you which para to remember. That alone you remember. This you have to remember compulsory. This you have to remember. So as per para 13, accounting standard 11 says that all the exchange differences arising because of the difference in exchange rate should be transferred to profit and loss account. Got it, not got it. Online people, clear or not clear?
Yes.
Now, coming back, I'm reading this for you. Now that you've done the sum, you understand this, it is better we read it. We're talking about now subsequent recognition on the balance sheet date. At every balance sheet date, foreign currency item should be reported as follows. Means what? Subsequent recognition of foreign currency monetary item. We're talking about foreign currency monetary item. What it is, I have not explained. After this theory, I'll go and discuss with you what is foreign currency monetary item. Foreign currency monetary item should be reported. In our example, foreign currency monetary item was that creditor, foreign creditor is reported. It is re-reported using the closing exchange rate. Correct or not? Initially, the foreign creditor was reflecting at what value? At the spot rate. Now we upgraded it to the closing rate. Got it, not got it? Because the amount receivable or payable remains outstanding as on the balance sheet date. Therefore, they are restated at the closing exchange rate so that they reflect the amount likely to be realized or required to be paid on that date. Which date? ஒருவேளை நீ 31st pay பண்ணால் or receive பண்ணால் என்ன வேல்யூ இருக்கலாம் அப்படின்னு assume பண்ணி we are recording at that date because that is the latest date. Present date we are recording. Clear or not clear? What is subsequent recognition? Subsequent recognition means reporting or remeasuring. We remeasured, no. Initially, the foreign creditor was measured in 84,000 rupees. Now it is remeasured at 86,000 rupees. So subsequent recognition means remeasuring an item, foreign creditor, after its initial recognition. Why are we doing this? In order to reflect the value at the subsequent reporting date. Clear or not clear? Tell no. Okay. Then exchange difference. What is exchange difference? Exchange difference is the difference resulting from reporting the same number of units, that is dollars, in reporting currency at a different exchange rate. In short, solapona, closing rate minus spot rate is called as exchange difference. Exchange difference. This can either be a gain or it can be a loss. Whatever it is, it'll go to your profit and loss account. It'll go to your Nanda, which account? Profit and loss account. What is closing rate? Closing rate is the exchange rate and the balance sheet date. Clear or not clear? In the point, okay, va? So you got one end-to-end picture about a transaction. In this, lot of masala is there. In this, lot of masala is there. What kind of masala, sir? If the exchange difference is short term, which para will be applied? If it is long term, which para will be applied? If para 13 is applied, what to do? If para 46 is applied, what to do? Whether the para 46 is for the depreciable asset or other than depreciable asset, like that, lot of masala is there. It's very easy. Don't complicate. It's very easy. But before I discuss this masala with you, you have to know one more term, which is foreign currency monetary item. இது என்னன்னு தெரியணும். இது தெரிஞ்சா மட்டும்தான் இது அப்ளை பண்ண முடியும். Because they're talking about short term foreign currency monetary item. அப்போ உனக்கு மானிட்டரி ஐட்டம் என்னன்னு தெரியல அப்படின்னா அது ஷார்ட் டர்மா லாங் டர்மா என்ன பண்ண ஒண்ணுமே புரியாது. You have to understand now what is the meaning of foreign currency monetary item. First we understood what is foreign currency transaction. Now we're trying to understand foreign currency monetary item. Got it, not got it? Now, foreign currency monetary item. This is little complicated. I'll go with a simple language. Simple language. In simple words, a foreign currency monetary item is money held in foreign currency. If I have 300 US dollars in my pocket right now, if I have 300 US dollars in my pocket right now, then this is called as cash in hand. Cash in hand. This cash in what form? Dollar form. So cash in hand. How much do I have? $300. So this is already in the monetary form. So this cash in hand is called as a monetary item. This is called as foreign currency monetary item. Got it, not got it? Check your pocket. Check your pocket, all of you. Check your pocket. 10,000 euros are there. How much it is there? 10,000 euros are there. கரெக்டா? உங்ககிட்ட 10,000 euros இருக்கு. அந்த 10,000 euro உனக்கு is it a foreign currency monetary item? Yes. First of all, 10,000 euro, is it a foreign currency? Yes. Euro is a foreign currency. Is it a monetary item? Monetary item means what? In money form. இருக்கா இல்லையா? இருக்கு. So cash in hand, any foreign currency in hand becomes your foreign currency monetary item. Okay, not okay. So இவ்வளோ ஈஸியா சார்? இதான் ஈஸி. இனிமேல் தான் கஷ்டம். Next point. Or they are trying to expand the meaning of foreign currency monetary item. இது தவிர்த்து, apart from this, what else is your foreign currency monetary item? An amount receivable. Amount receivable means asset, or payable means liability. The amount that is receivable or payable in foreign currency, the amount that you're going to receive in dollars or going to pay in dollars. Incoming, outgoing, both are in dollars, not in INR. Not in INR. The amount receivable or payable in foreign currency, where the amount of money to be received and paid is fixed or determined already to the foreign creditor. In our example, to the foreign creditor, how much should I pay? How many dollars should I pay? I have to pay $1,000. I have to pay $1,000. So this foreign creditor is there. No, this foreign creditor is a foreign currency monetary item. He is a foreign currency monetary item. What is the meaning of foreign currency monetary item? A foreign currency monetary item is nothing but, first point, money already held in foreign exchange. This is not money held. This is a liability. This is not money held. It is a liability. Okay. What is the second point? Any amount that is receivable or payable. In my example, it is payable. It is payable. I have to pay to the foreign creditor in the foreign currency. Yes or no? And the amount that I have to pay is fixed. How much it is? $1,000. Then this foreign creditor becomes my foreign currency monetary item. The amount that you're supposed to receive, the amount that you're supposed to pay should be in foreign currency. First condition. Second condition, what amount should I receive? What amount should I pay? Both should be fixed. Got it, not got it? This fixing, how does it happen? How does this come? How does this get fixed? இது நான் இவ்வளவுதான் பே பண்ணணும் அப்படிங்கிற எப்படி ஃபிக்ஸ் ஆகும்? It can be fixed under normal business transaction. Normal business transaction. To one person, I have to pay $1,000. To this foreign creator, I have to pay $1,000. எப்படி முடிவாச்சு? How did this got fixed? Based on the normal business transaction that I did. Got it, not got it. Okay. Sometime this will be fixed under a contract. This will get fixed under a contract. For example, between me and the foreign creator, there is one bills receivable, bills payable contract entered. So how much money should I pay? It got mentioned where? In the contract. So the amount that I have to pay, the fixed amount that I have to pay is fixed where? Is fixed because of what? It is fixed because of a normal business transaction or under contract or any other purpose or any other reason. So there is some underlying document, some underlying instance which is forcing you to pay so much money at so much price. Got it, not got it. If all this condition is satisfied, then you can say that item is a foreign currency monetary item. Sir, why are we talking about foreign currency monetary item, sir? Why? Because we are doing the translation on the report closing date, no? Closing date la enna panna? In the foreign creator the value update panniya. On the closing date, you upgraded the foreign creator to the closing rate, no? This upgradation will happen only for a foreign currency monetary item. So for a non-monetary item, no need to upgrade the asset liability to the closing rate. Let it be at the transaction rate itself. Got it, not got it. So for me to decide which and all item should I update to the closing rate, I need to identify them as first foreign currency monetary item or non-monetary item. Monetary item apdina, do subsequent recognition. If it is non-monetary item means don't do subsequent recognition. Purida. See, first is foreign currency transaction. All the foreign currency transaction will first have to be recorded initially. That is called as initial recognition. After initial recognition, you have to identify whether the item is foreign currency monetary item or foreign currency non-monetary item. Non-monetary item means no subsequent recognition. ஆனா இதுக்கு ஒரு எக்ஸெப்ஷன் இருக்கு. எப்போ பண்ணுங்கிற எக்ஸெப்ஷன் இருக்கு. I'll discuss. But if it is a foreign currency monetary item means confirm subsequent recognition. What is subsequent recognition? You will record the exchange difference. How do you record exchange difference? Closing exchange rate minus spot exchange rate. If you do, you'll get the difference, profit and loss. Got it, not got it. So if you don't know whether the item is monetary or non-monetary, how will you know whether should I do subsequent recognition or not? Tell no. I'll discuss now. I have a lot of things to discuss. See, full tabular column is there. Monetary, 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 non-monetary, non-monetary. Full masala. Full loaded. Now, this is simple language. Okay, wow. Now let me talk about complicated language. A foreign currency monetary item is money held or asset or liability arising in a foreign currency. In the point that I split pante A and B. This is talking about money held in foreign currency. Point number A. Point number B talks about asset liability arising because of foreign currency transaction. Got it, not got it. Okay. Once you identify a money held asset or liability, the second thing you have to check whether this money held or asset or liability has a fixed and a determined amount or not. This fixed amount is fixed under contract or business transaction or under any other modes. Fix ayirukano. I have to pay $1,000. That should be fixed. Okay. And the money which I pay, settlement should be in foreign currency. If settlement is happening in INR, then this is not foreign currency monetary item. So 3 conditions needs to be satisfied for the subsequent recognition. To do a subsequent recognition, 3 items needs to be satisfied. What is the first condition? It should be a money held or asset or liability. Either amount, how much should I settle? Is it fixed? You have to check. If it is fixed, then third thing, whether the payment or receipt is going to happen in foreign currency. If all the 3 conditions together satisfied, it is a foreign currency monetary item, which will go for subsequent recognition. If in this 3 condition, if any one condition fails, then it is not monetary item. Got it, not got it. It becomes non-monetary item. Clear? Now, can we see various examples? Trade debtor. In USD, I have to make the payment, which means I sold the goods to customer sitting in America. There's one customer in America. I sold the goods. I have to receive the money in dollars. புரியுதா? அவன் டாலர் தான் பே பண்ணுவான். He'll not pay in INR. He'll pay me in dollar. So money held. Is it money held? Is a trade debtor money held? Illapa. I've sold the goods to him. I'm meant to receive money. Appo it is asset. Anything that I receive in future is asset. Got it, not got it. Apona, this is a asset. First condition satisfied. How many conditions? 3 conditions. It should be asset. Okay. Is the amount fixed and determinable? Yes. இப்போ நான் உனக்கு கிளாஸ் கொடுத்துருக்கேன். I'm taking classes 40,000 rupees means is it fixed or not fixed? Fixed. It is fixed. So like that, whenever you sell any product to any customer, the value is fixed. Second condition also satisfied. What is third condition? The money what I receive from the customer will be in what value? It should be receivable in USD. Then it is a monetary item. I will do the subsequent recognition. But the money that is going to come to me, it is going to come to me in INR. Will I do subsequent recognition? அதாவது in the balance sheet from the foreign debtor I have to receive rupees 1000. The billing is done in INR. Amount I'll receive in INR. அப்போ will any exchange difference come? நான் போய் பேங்கர் கிட்ட ஏதாவது கரன்சி கொடுத்து வாங்கணுமா? இதுவும் கிடையாது. Exchange difference, profit loss on exchange difference comes when I have to pay the money in dollar, I have to receive money in dollar. So when I have to deal with dollar, I have to play with INR. INR கொடுத்தா டாலர் வரும். டாலர் கொடுத்தா INR வரும். So when there is a transaction between dollar INR, then only I need to do subsequent recognition. You have sold the goods to one foreign customer, billing INR, receipt INR, everything is INR, INR. In that case, will I do subsequent recognition? No. In that, will AS11 be applied? No. Because the money what I'm going to receive is INR, billing INR, everything is INR. So AS11 is not applied for such transaction. Purida. Got it, not got it? Tell no. Online people, video on Madi. First. Trade creditor. Who's creditor? The person to whom we have to make the payment. Supplier, vendor. Now, I purchase goods from USA. I have to pay $1,000. Purida. In what form I have to pay the money? Dollars. The payment is done in dollars or euro. I've taken euro here. Okay. Euro le pay padno. Okay, wow. The money that I have to pay in future is liability. So first condition, is it a liability? Yes. Who's a liability? The foreign trade creditor is a liability. Second, the amount is determined? Yes. Because exactly I know how much money to pay. And the payment is done in euro, foreign currency. Means what? I have to give INR to the banker and get euros. In the euro da na pay பண்ணுவேன். So between INR and euro, ratio is changing, no? 1 euro to buy, how much money should I give? Let's say around 100 rupees. 100 rupees. Example I'm telling. Purida. So difference is coming or not coming. So today if I buy euro, 100 rupees. Tomorrow if I buy 95 rupees. Day after tomorrow, 105 rupees. So there is a fluctuation in the rate. So therefore I need to record this fluctuations. Got it, not got it. அதுக்கு தான் இவ்வளவு effort போடுறோம். So this fluctuation comes for what transaction? Foreign currency transaction denominated, designated in the foreign currency. Where payment, receipt, everything is happening in foreign currency. Then this much drama we have to do. You have to understand which is foreign currency monetary item. Got it, not got it. Next, loan receivable in US dollar. I've taken one loan from USA, $10,000. I have to pay in future. Sorry, loan receivable. I'm so sorry. Loan receivable means I have given loan to one party sitting in USA. Or party USA la irkaru. That person was in need of money. I gave him money. I gave in dollars. In future, I'll get money in dollars only. So anything that I get in future is asset. So it is asset. First condition, it has to be either in form of money or asset or liability. First condition, asset satisfied. What loan I gave, that much only I'll receive, no boss. In agreement, what have I agreed? $10,000 கொடுத்திருக்கேன். 1 year கழிச்சு திருப்பி 10,000 தான் வரணும். Is the amount fixed and determined? Yes. So amount is fixed and determined. And the money in future, after 1 year, 2 year, 3 year, in what form will I receive? In US dollars. Since all the 3 conditions satisfied, this is a foreign currency monetary item. Apana, on the closing date, this loan, I need to upgrade to the closing rate. Got it, not got it. When I upgrade to the closing rate, the exchange difference will come. That exchange difference initially, as of now, what I discussed will go where? In the P&L. Got it, not got it. Sir, when you take class further, will you tell that no, this will not go to P&L, this will go to some other account? Yes. So what that is, I'll discuss in few minutes. Okay, not okay. First, இது முடிச்சிடலாம். இது முடிச்சதுக்கு அப்புறம் I'll go to the next point that where and all this exchange difference can be transferred. Got it, not got it. Tell no. No energy. Loan payable. GBP. What is GBP? Huh? British pounds. Okay, wow. Now, pounds. Loan payable means what? நான் loan வாங்கியிருக்கேனா கொடுத்துருக்கேனா? வாங்கியிருக்கேனா கொடுத்துருக்கேனா? Loan வாங்கியிருக்கேன். So I've taken a loan. I've taken loan in pounds. I have to repay in future in pounds. Anything that I have to repay in future is liability. First condition satisfied. How much money should I pay in pounds? Is it fixed or not fixed? Yes, under the loan contract, it is fixed. Amount is fixed and determined. And the condition, the opposite person said that I don't want INR. You give me in pounds. You give me in pounds. So I'm going to pay in pounds. Hence it is monetary item. So on the balance sheet date, the liability is in foreign currency. So I have to upgrade in the closing exchange rate. That exchange rate, the closing, if I do, upgradation I do, that will give me exchange difference. That exchange difference will go to your profit and loss account as of now. Okay, not okay. Okay. Same way. Interest receivable, payable, same concept. No problem. Okay. Cash in hand. Already in money held in form of foreign currency. Amount is determined. No, how much it is? In pocket, if I have $300, that is a determined amount, fixed amount. Yes or no? This condition not required because already the money is in form of monetary nature. So third condition, no need to check. AS11 says that if you have any money which is in foreign currency, by default, it is a monetary item. Second, third condition, no, don't even need to check. If you have foreign currency in hand, போறோம் அது மட்டும் பாருங்க, வேற எதுவும் பார்க்க வேண்டாம். No need to check any other condition. By default, it is a monetary item. Got it, not got it. There's a foreign currency bank balance. You have a foreign bank account. In that bank account, $1,000 are there. So that is nothing but money held. For money held, will you check any other condition? No. By default, it is monetary item. Got it, not got it. Tell me no. No problem. Okay. Now, imported a machinery. We have imported one machinery on credit. What is the journal entry? Machinery account debit to foreign vendor. Yes or no? Let's say it is $10,000. What is the spot rate? How much we can take? 90 will take? Rupees 90. Tell me the amount, please. 90,000. Who said 9 lakh? 9 lakh. So I purchased one asset worth 9 lakh. This entry is called as IR. IR stands for initial recognition. Got it, not got it. This initial recognition is done on the date of purchase of asset, date of transaction. Got it, not got it. This 90 rupees is called as exchange rate. What exchange rate this is called as? Spot rate. Very good. This is called as spot exchange rate. Either தெளிவா இருக்கீங்களா? Now, I have to do a subsequent recognition. But for doing subsequent recognition, I have two items. This is one item. This is another item. Yes or no? Tell no. ரெண்டு ஐட்டம் இருக்கு. இந்த ரெண்டு ஐட்டத்துல which is the foreign currency monetary item? Sir, machinery பத்தி பேசுவோம். Let's talk about machinery. 3 condition has to be checked. The 3 condition satisfied அப்படின்னா then machinery is a foreign currency monetary item. You do the change. You do the subsequent recognition. பார்க்கலாமா? What is the first condition? Sir, it should be an asset, sir. It is an asset. Machinery is an asset. First condition satisfied. Second condition is what? Amount should be fixed. Wait பண்ணுங்க. We'll come to third point first. What is third point? What is the third point? There should be a amount payable or receivable in foreign currency. In the asset நீங்க விற்க போறீங்களா? This machinery are you going to sell? Are you going to buy one more time? It's already purchased. Third point is satisfied? No. I'm not going to pay any money. I'm not going to receive any money. Rather, I'm going to use the asset. So third point says what? Against this asset, something should be payable or receivable. That too in foreign currency. Machinery விற்க போறீங்களா? No. Will money come to in foreign currency? No. Third condition violated. If any one condition also violated, this is not a foreign currency monetary item. If machinery is not a foreign currency monetary item, will I do subsequent recognition for machinery? No. Sir, can you check for foreign vendor? Yes. What is the first condition? Sir, it should be either a money, foreign currency money should be there, or asset or liability. What is it? Sir, it is a liability, sir. Okay. How much money should I pay in dollars? Is it fixed? Yes. Sir, $10,000 to pay is fixed under the contract. It is fixed. We have purchased this under contract, fixed. Third, fixed amount. Okay, wow. Third is what? Here, payable in foreign currency. Am I going to pay this in foreign currency? Yes. But this becomes my foreign currency monetary item where I have to do subsequent recognition. Got it? Not got it? Okay. Now, as on the balance sheet date of balance sheet, closing rate is 100 rupees. Closing rate is 100 rupees. Panda. I'll do a different thing now. Closing rate is, let's say, 70 rombo kammi aiduma. 85. Now, had you made the payment on the date of purchase, how much should I pay per dollar? 90. Today, on the balance sheet date, if I pay, how much should I pay? $1? 85. இப்போ gain a loss? அன்னைக்கு பே பண்ணா 90 ரூபா, இன்னைக்கு பே பண்ணா only 85 ரூபா. Upon it is gain. So here the exchange difference is gain for me. Yes or no? So what should I do? Exchange gain is a nominal item. Debit all expense and losses, credit all income and gain. So to exchange difference, how much? So $10,000 into what is the difference? 90 minus 85. 5 rupees is the exchange difference. How much it is? 50,000. So you created a liability for 9 lakh. Will you pay 9 lakh? No, you'll pay 50,000 less now. ஏன்னா 5 ரூபா டாலர் சேவ் பண்ணிட்டீங்க. அப்ப how much will you pay? 8,50,000. அப்ப foreign creditor is a liability. To increase liability, you gave credit. To decrease liability, debit. அப்ப foreign vendor account debit 50,000 to exchange difference. Got it? Not got it? So this subsequent recognition is done for a foreign currency monetary item, not for all the item. Machinery, did I pass the entry? No, because that is a non-monetary item. For non-monetary item, we will not do subsequent recognition except this case. Now, what is that case? I'll discuss in next class. Got it? Not got it? If it is a foreign currency monetary item, confirm subsequent recognition. But if it is non-monetary item, it is not to be subsequently recognized. Ana, we have to recognize if this happens. So what is this? I'll discuss in next class. Got it? Not got it? Tell no. Okay. Sir, this exchange difference is a nominal account. What should I do with this? You will say P&L, yes. But here I have a point. Which I'll discuss after some time. My intention to discuss this entry is what? To make you understand what is a foreign currency monetary item and what is a non-monetary item. That was the only intention. Now, this exchange difference, you are telling it will go to P&L, which is correct. Ana, இதுக்கு ஒரு alternative option உண்டு. There is one alternative option to this. So what is that? I'll discuss not now. It's a masala. I'll discuss in some time. See, curiosity should be created by the... No. She's saying reserve and surplus. Wrong. When this rule was created, were you in the ASB board? No. No. Then how do you know? You have to tell me. No. AS11 says something else. What is that? I'm creating curiosity. Wait, suspense I'm creating. So machinery is not a monetary item. It is a non-monetary item. Ana, creditor is a monetary item. Got it? Not got it? Advance paid to foreign supplier of machinery. Advance paid already. What is entry for advance paid? Advance paid to supplier account debit to cash or bank. Panam poiduchu. This is advance. If the opposite supplier, அதாவது நான் foreign company pay பண்ணிட்டேன் advance. Guys, understand the language, no? Advance paid to the foreign supplier. From Germany, I'm importing machinery. For that, I paid advance. Frida. So this advance paid is asset or liability? It is asset. Why it is asset? நீ கொடுத்த காசுக்கு ஒன்னா ஃபியூச்சர்ல machinery வரும். அவன் machinery கொடுக்கல refund வரும். Anything that I get in future is asset. Got it? Not got it? This is not the true meaning of asset. This is Amul baby meaning of asset. Since 11th, I'm discussing. Why? Because that is only there in your mind. I'm trying to connect with it. Got it? Not got it? So anything that I receive in future is asset. Okay. So first condition, asset satisfied. Third condition enna? Forget second one. Third one is what condition? Third one. There should be something which I should receive or pay in foreign currency. இதை பே பண்ணுமா, இதை ரிசீவ் பண்ணுமா? இல்லையே, மொத்தமா பே பண்ணிட்டியே, ரிசீவ் பண்ணிட்டியே. So there is nothing to settle in the foreign currency because the amount is already paid. Third condition violated. Since the third condition is violated, I'm not going to second condition. Hence, I've declared this as non-monetary item. Got it? Not got it. Advance received from foreign customers. Sir, are we doing time pass, sir? இதெல்லாம் question கேட்பாங்களா, sir? Childish question, sir. Take illustration 1. Classify the following item as monetary and non-monetary. All those who are thinking that I'm doing time pass, I'm so sorry. This is a requirement as per your illustration 1, which is a monetary and non-monetary item. Trade receivable, monetary item. PPE, machinery, non-monetary item. Easier சொல்லிட்டீங்களா? How about inventory, investment, equity shares? Confusing varda? This is why I'm discussing. Got it, not got it? If I don't discuss now, you'll struggle. We'll spend time. By spending time, you'll think, oh, sir is wasting time. But this, when I complete, no, if such question comes, it'll make your life heaven. Heaven. Now, advanced receipt from a foreign customer. I'm going to sell the goods to one party in Australia. So for that, I got the payment in advance. Got it, not got it. I received the money in advance. What entry? Cash or bank account debit. Cash varadhukana foreign la bank la varum. So bank account debit to advance received from foreign debtor. Foreign debtor. You have credited. What is it? Liability. Why it is liability? Against this money, I have to give the machinery in future. If not, I have to refund the money in future. So anything that I give in future is liability. Got it, not got it? The first point, it is a liability. 1 second, people. 1 second. Charger put. Laptop charger. Oh, you want your charger also? Huh? She's like, it's a laptop charger only. We also want charge. See, this kind of questions, if new people ask, it is understandable. But you're there from long time, ma. What, you're a new student, eh? Since when are you with me? 11th standard. This bugger is there with me since 11th standard. As if he doesn't know. Now, no break. Wait. I'll give break. Wait. Nice flow it is going. So advance receipt from customer. First point, liability. Okay, wow. Am I going to settle this liability in foreign currency? Pana vaangiten. Am I going to settle in foreign currency? If I deliver the machine, will I settle in the foreign currency? No, there is nothing to settle in the foreign currency because amount is already received. Got it, not got it? So as on the date of balance sheet, so now you cannot come and say, sir, if you do not give machinery, you have to repay the money back. No. You tell me, normal businessman, will he think about delivering machine or not delivering machine? As a businessman, I'm sitting here to give the machine, boss. So why will I think, what if I don't give? Then all the 3 conditions satisfied, then this becomes your monetary item. If you have decided that I'm not going to give the machinery, I'll refund. It is a monetary item. But now I'm telling, normally in business, this is a non-monetary item because my intention is not to refund. My intention is to supply machinery. Hence, it is a non-monetary item. Got it, not got it? Now comes investment in foreign equity shares. Investment in foreign equity shares. Apple company shares vaangirikeenga. So, is it an asset for you? Yes, because you've invested money. By selling that in future, you will get money. So, it is asset. Investment in equity shares, foreign equity share is asset. Any problem? My second utringa. Third, what is the third point? The payment and the settlement should be in foreign currency. Correct? If I sell the shares, I'll get the dollars only. Ana, இன்னைக்கு sell பண்ற முடிவாயிடுச்சா? Is there a contract which gives you a right to receive the money? What is the language? Third point. Through a contract, through an agreement, or through any other means, it should be confirmed that as on the balance sheet date, I will receive money from the investment. அப்படிங்கிறது கன்ஃபார்மா தெரியுமா? No, because I have not decided to sell. Have I decided to sell? No. So it is going to continue in future. Got it, not got it? Third point. Is the amount fixed? என்னைக்கு விற்கிறனோ அன்னைக்கு தான் அமௌண்ட் என்னன்னு தெரியும். Because today Apple ka share is $500. When I sell, it will become $700. This will keep on fluctuating. So amount is not determined. Amount is not determined. As on the balance sheet date, amount is not determined. Hence, it is a non-monetary item. There is no contract for settlement of investment. As on the balance sheet date, is there any contract which says that Pratik sir, you have to pay money, receive money? Any contract is there? Tell no. No. நான் வாங்கி வச்சிருக்கேன். It is still investment. So there is no scope of settlement. Amount also for settlement is not fixed. Second and third condition both are violated. Hence, it is a non-monetary item. Got it? Not got it? Tell no. So coming here, investment in equity shares. Which equity shares? Indian equity shares. Indian equity shares you're dealing in INR. What currency it is? Reporting currency. Will it get covered in AS11? No. So here when they're talking about equity shares, they're talking about foreign equity shares. Whenever we talk about foreign currency transaction, only AS11 will get triggered. We are talking about investment in foreign equity shares. So this is a non-monetary item. Got it? Not got it? Same way for patent, machinery, tangible, intangible, same rule. I'm not going too much in depth. Inventories வாங்க பார்க்கலாம். I have purchased goods from foreign country. எங்கிட்ட ஸ்டாக்கா இருக்கு asset. Is it a monetary item? Is it a monetary item? What is the third condition? There should be a contract for sale of inventory. Inventory means what? Unsold goods at the end of the year. What is meant by inventory? The goods which is unsold at the end of the year is called as inventory. Unsold and there is no contract for sale. There shouldn't be any contract for sale. That is inventory. Got it? Not got it? When there is no contract for settlement in foreign currency, will I receive any amount? Will I pay any amount in foreign currency? No. How much money will come to you? No. Second and third condition violated. So inventory is always non-monetary. Do not restate inventory at the closing rate. No purpose. Sir, I have 1,000 worth of inventory, sir. இன்னைக்கு வாங்கினேன். Purchase பண்ணும்போது வாங்கியிருக்கேன். Spot rate is how much? 84,000. Will you upgrade this to 86,000 at the balance sheet date? Why will you upgrade? இந்த 86,000 யாருக்காவது காசு கொடுக்க போறியா? இல்ல பணம் வாங்க போறியா? இல்ல. Because this inventory is not going to get fluctuated. Because of dollar getting fluctuated, will my inventory value change? No. Because that stock is now in my hand, which is not subject to fluctuations. Hence, there is no need to do subsequent recognition. No need to restate it. Got it? Not got it? Tell no. Clear or not clear? So inventory is a non-monetary item. Inventory, non-monetary. Trade receivable, monetary. Investment, non-monetary. PPE, non-monetary. It's my open challenge. If anybody has learned this topic in this depth, open challenge. Any person who's repeater here? Any difference do you find? Lot. இந்த மாதிரி என்ன சொல்லி கொடுத்துருக்காங்களா? Anybody else? No. I'm telling you, it's my open challenge. My only point is, whatever you study in the right manner. So that in exam, if they twist the question also and give, your mind will run on the spot how to change the answer accordingly. That's the beauty of learning conceptually, every nook and corner. Now, you want break, huh? Oh my God. We're going in nice flow, no? Which last point? Inventory. See, she's telling for inventory, if there is a contract for sale. See, if the contract is done, then inventory will no longer be inventory. You'll pass a credit sale entry. See, please understand, a contract for sale of inventory means what? Sale agreed. Means what? Ownership transferred. A contract can transfer the ownership of the product. When that is done, when contract is done, right to receive is established, then that inventory is no longer inventory. No. For that, you'll always pass the entry. Say, what do you call it? Receivable to sales, debtor to sales, foreign debtor to sales. So once it becomes a foreign debtor, then you have to restate it. Guys, you understood what question she's asking? She's asking, sir, for this inventory, if there is a contract for sale or settlement, or inventory contract for sale, what does it mean? That you have sold it. Or inventory contract for sale means what? You have sold it. If you have sold it, what entry will you pass? Foreign debtor to sale. A foreign debtor becomes your monetary item. That you have to restate it. Got it? Not got it? Clear or not clear? Oh. Class 1 hour 19 minutes only over. What break you want for this? 3 hours class. After that, if you ask break now, there's some sense in it. For 1 hour, who will ask break now? Come now. Come on. Hey, we have a lot of questions to do, man. Okay, can I explain this chart? You wanted to know the answer for the suspense, no? Sir, except from P&L, where it will go? Except P&L, where it will go? Suspense. That suspense I will reveal. Then I'll give you break. Now listen. The treatment of exchange difference. What is exchange difference? Closing rate minus spot rate will give profit or loss. That is called as exchange difference, which results because of subsequent recognition. How do I treat that exchange difference? So now, for that, you have to ask yourself whether this is a foreign currency monetary item or not. So what is foreign currency monetary item? We have decided. Yes or no? We know that. Now we have to check whether that is short term or long term. Short term or long term. Short term, long term, how do you check? Short term, long term, how do you check? As on the balance sheet date, whether this is long term or short term, how do you check? So AS11 says that when the transaction took place, in our example, which example? That 2nd February example. 2nd February or 10th February? 10th February. 10th February, we purchased goods from USA. Correct? This, when will I settle? Within 12 months of, not balance sheet date, within 12 months of transaction date. In Schedule 3, current asset, non-current asset, how do you check? 12 months is calculated from balance sheet date. Purida? Ana, here AS11 says that short term, how do you calculate short term? The money what I'm supposed to pay, is it within 12 months of transaction date? Now, I'll do it on the board. When did the transaction take place? Date of transaction? 2nd Feb 2026. Am I right? But this is which financial year? Sorry, 10th Feb. Okay, 10th Feb. This is financial year 25-26. In 25-26, on 10th Feb 26, I purchased one goods from Australia. How much should I pay? 1,000 or 10,000? $1,000 I have to pay. Yes or no? As on the balance sheet date, I have not yet paid. Upon it is still payable. It is still payable. Now, on the balance sheet date, this 84,000 rupees I'll show no as what? Foreign creditor. Is it short term or is it long term? I have to decide. How will I decide? From the transaction date, calculate 12 months. 12 months is coming here. So, from balance sheet date, again calculate 12 months. If it is within 12 months of the balance sheet date, if it is within 12, no, wait. 12 months of transaction date, wait. 12 months of transaction date. 12 months of transaction date comes here. But here, still if you tell that, the AS11 language says that 12 months you're supposed to calculate, 12 months you're supposed to calculate from the transaction date. Upon enga mudiyum? 10th Feb 26 it will get over. 10th Feb 26 it will get 27. I'm so sorry. 27 it will get over. So, as on this balance sheet date, now one more condition I have to check. See, due date is checked from what date? From the date of transaction. Now, this is what? Balance sheet to balance sheet. Within the next balance sheet date, whether the amount is going to be settled? Yes. In that case, this becomes your short-term foreign currency monetary item. It becomes short-term foreign currency monetary item. Got it, not got it. See, the transaction date, calculate 12 months. You'll get the due date of payment. Within that, if you're going to make the payment, Apnina, it becomes your short-term foreign currency monetary item. In the balance sheet, I don't want to confuse you. Let it be. The payment is going to happen within this date, within this period. Then it is called as short-term foreign currency monetary item. Forget the balance sheet. From the transaction date, calculate 12 months. Within that, if you're going to make the payment, Apnina, we will call this as short-term foreign currency monetary item. Once you decided that this is a short-term foreign currency monetary item, this has to be restated at the closing rate. When you restate it and the closing rate, when you restate at the closing rate, you will get profit or loss. That profit and loss will always be transferred to P&L as per para 13. As per para 13. Para 13 is the original para which was introduced in the inception of AS11. AS11 introduced Pannamodu. Para 13 said that whenever any exchange difference comes, everything will go to your para 13. Sorry, we'll go to your P&L as per para 13. Got it, not got it. So always people, short-term foreign currency monetary item ka exchange difference will always go to P&L, P&L, P&L. Okay, not okay. By chance, if it is long-term foreign currency monetary item, means what? The payment is going to happen beyond 12 months. Beyond 12 months. From date of transaction, if I calculate 12 months, it is 10 Feb 27. When are you going to make the payment? Somewhere here. The payment is going to happen beyond the 12 months of the transaction date. Then I will call this as long-term foreign currency monetary item. Foreign currency monetary item is supposed to undergo subsequent recognition. Got it, not got it. இதுல ஏதாவது நீ வந்து எக்ஸ்சேஞ்ச் டிஃபரன்ஸ் கண்டுபிடிச்ச அப்படின்னா, and if that is resulting into profit and loss, here you have two options. As per para 13, if you're opting para 13, you will transfer it to P&L. But if you're not opting para 13, means you're going to opt para 46 or 46A. In that case, two more option is given. Got it, not got it. Now listen one more time. The foreign currency monetary item. First step is to identify a foreign currency monetary item. Why? For subsequent recognition. Two choices. Two things you have to decide. Whether this is short term or long term. Short term and long term. Short term and long term, how do you check? 12 months from transaction date. So if payment is happening within 12 months of transaction date, it is short term. If payment is happening beyond 12 months of transaction date, it is long term. Okay. If it is short term, always transfer the exchange difference to P&L. But if it is long term, you have choices. You have choices. What is your first choice? Opt para 13. If you go for para 13, always it is P&L. Transfer the ED to P&L. But if you're opting for para 46 or 46A, actually today's present day para is 46A. அதாவது corporates get is 46, for non-corporate it is 46A. அப்படி வச்சுக்கோங்க. In that, you have further two options. Now, if the exchange difference is for a depreciable asset, if the exchange difference is for depreciable asset, example, you have taken a loan for asset, for buying asset. You've taken a loan for buying asset. So what is entry? What is entry? Asset account debit to foreign loan. I've taken a loan. Means to the supplier, money is already paid. I have to make the payment to whom? The foreign banker. To the foreign banker. Purida. So what is entry going to be? Machinery account debit to foreign bank loan. Foreign bank loan. Got it? Machinery is a non-monetary item. We discussed. But foreign bank loan is a monetary item. Why? One, it is a liability. How much money to pay exactly? I know. And the payment should happen in the foreign currency. Since all the conditions satisfied, foreign bank loan is a monetary item. Now I have to make this payment beyond 12 months of transaction date. So it became long-term foreign currency monetary item. Mukunda? Here. Now, I have opted para 46A or 46H. In that case, if this foreign currency monetary item, upon subsequent recognition, is giving birth to exchange difference, and this exchange difference is because of machinery. Machinery is a depreciable asset. In that case, transfer such ED to the depreciable asset. Got it, not got it. How to do entry for this? I will show. I have questions based on this. Inike pandrom. Got it, not got it. So exchange difference will not go to P&L. It will go to the asset. You will capitalize to the asset. Capitalize is the wrong word because capitalize means what? Add always. But here add minus both will happen. So hence I've used the word transfer this to what do you call it? Asset account. Transfer to asset account. Now why it is? What entry? Everything I'll discuss through a practical question. Ana, if this exchange difference is for other than depreciable asset, means what? I've taken a loan for my business. I've taken the loan for my business, not for asset, for my business. But what is entry? Bank account debit to foreign bank loan. So foreign bank loan is my monetary item, foreign currency monetary item. And I'm going to repay the loan after 5 years. Apana long term. So if the exchange difference is coming for a long-term foreign currency monetary item, which is for other than depreciable asset, then the ED should be transferred to FCMITD account. Oh my God. The difference should be transferred to foreign currency monetary spelling MONETARY. foreign currency monetary item FCMITD. T stands for translation difference account. Understand what this is? What, you know what is the meaning of foreign currency monetary item? Foreign currency monetary item is that item which will go for subsequent recognition. When you do subsequent recognition, that is translation on the closing rate, there will be one exchange difference. That difference will go to this account. So this is foreign currency monetary item translation difference account. Oh my God. Meaning purida. So when you do a translation, of the foreign currency monetary item, you will have a exchange difference. Based on that, it got inspired and this name has been kept. Foreign currency difference irukku and the scenario based panni, it got inspired and this name has been given by AS11. Got it, not got it. So if the exchange difference is for other than depreciable asset means it will go to your MCMITD account. Got it, not got it. It will not go to your P&L. Your question should be, why sir? Ask. Everything will go to P&L, you said. Suddenly 46 is coming, 46A is coming, it is telling depreciable, now go to asset, non-depreciable means FCMITD account. Why? Ask. If you don't ask, I will not say. Why? Everybody should ask me in chorus. And people should switch on your videos. Compulsory. Then only I'll say history. Ask all of you. Why, sir? Everybody. No, half the people not open their mouth. I will not tell. Bye. Go for break. Why? Break or explanation. If you go for break, after break, I will not explain. If you want explanation, listen and then go. Why? Ask all of you. Open your mouth. Everybody ask. Why? Putti kada. Small story. In 2006, 7, 8, 9, we had a global economic crisis. Yes or no? Terima? You were not born, so you don't know. Wonderful. What a nice answer. In 2006, 7, 8, 9, that period, we were facing global economic crisis. We had a great depression. Depression means not the depression what you're going through. This depression is country depression, economic depression. Got it, not got it. And the period ennachu theriyuma? Our Indian rupee, INR, got weak. Means what? Before this economic crisis, if I was purchasing $1 for 35 rupees means because of this economic crisis, same $1 I had to purchase for 50 rupees. So how much extra I'm supposed to give? 15 rupees extra I have to give. Correct? Now, AS11 beginning, when AS11 was created, Accounting Standard Board said that whatever the exchange difference comes, as per para 13, take it to the profit and loss account. Now what happened is, during that period when they prepared balance sheet in 2007, 2008 balance sheet, here on the liability side they had foreign creditor, $10 lakhs. How much it is? 10 lakh is very less. Okay, I'll keep it very less itself. $10 lakhs. $10 lakh I have to pay the money. Got it, not got it. Now, the spot rate was 35. Tell me the liability. 3 crore 50 lakh was the liability. Yes or no? This 35 is the spot rate. Transaction date. Now, when the same $10 lakh, we wanted to restate on the closing rate. Closing rate was 50. Apo, how much should I record at? 5 crore I should record it. Apo, how much is the exchange difference? 1 crore 50 lakh become exchange difference, which is exchange difference loss. This 1 crore 50 lakh went where? In the P&L. It went in the P&L because in the 1 lakh 50 entry, exchange difference account debit to foreign creditor or foreign bank loan. Okay, wow. So 1.5 CR, this exchange difference went where? To P&L. This is just 1.5 crore. I've taken a small value. In big companies, this 1.5 crore exchange difference went to 150 crore, 250 crore, 500 crore. For a profit இருக்கிற company, because of this exchange difference, he went into loss. புரியுதா? Because of exchange difference, the profitable company went into loss. Imagine ஒரு இன்வெஸ்டர் அந்த கம்பெனி பேலன்ஸ் ஷீட் பார்த்தா P&L பார்த்து எப்படி கோவம் வரும் உனக்கு? Oh, this company was so profitable. It went into loss. Bad company. I will take all my investment. So because of this AS11, people started getting a negative perception about all the companies and they started withdrawing the investments. This was affecting the company. It was affecting the Indian companies. Therefore, MCA in 2008-9 range, they came out with a notification telling that for a temporary period, we want to give a temporary relief to all the companies. Don't take this exchange difference to P&L. Take it to the asset account or to the FCMITD account. அங்க எடுத்துட்டு போயிடுங்க. Which means it goes to the balance sheet. It goes to the balance sheet. Yes or no? You, whatever the balance is there in the exchange difference, you take it to the cost, no? அந்த காஸ்டோட ஆட் பண்ணிடுங்க இல்ல மைனஸ் பண்ணிடுங்க, then you depreciate. So instead of this 1.4 going to P&L directly through asset in form of depreciation, is sleeping. Through depreciation, it goes to your P&L gradually over the useful life of the asset. This is for depreciable asset. For other than depreciable asset, it goes into FCMITD account. What is this account? You know, this account is deferred revenue expenditure. It is deferred revenue expenditure. So cheating, sir. You said in the other class, the deferred revenue expenditure got abolished in 2002 itself. True. This is the only exception. In AS11, they created foreign exchange monetary item translation difference account. This is the only item where they said you amortize, you depreciate, you write off this loss or gain over a period of the what you called, and the difference வந்தது காரணம் இருக்கு இல்லையா? For example, this difference is because of loan means over the loan ஓட tenure இருக்குல்ல, loan period, அதில் allocate பண்ணிடுங்க. So we have taken a loan for 5 years, then exchange difference is amortized over a period of 5 years. So in that way, what happens? The loss will go to P&L, but not in one shot. It will go gradually. So it did not affect the P&L instantly. Purida, tell me no. So before the crisis came in 2006, the entire exchange difference loss was going where? In your P&L. In your P&L. AS11 said P&L. But considering the situation from 2006 to 2009, the company decided, that is MCA decided that this is very wrong for the companies. It is very hardship. It is creating a lot of hardship on the companies. It is spoiling the image of the companies. Hence, they said, for companies, will come out with a temporary relief. So they inserted one para called as para 46. Para 46. They said that this is a transitional provision applicable up to 2011. Ana, it got deferred, extended. I'll show this. It got extended. Initially, the period mentioned was 31st March 2011. Up to 2011, this statement will be done. Roshni here. Which was substituted by 31st March 2012 through one notification published by MCA. Subsequently, in 31st March 2012, got changed to 31st March 20. So now this has become a permanent option. This was a transitional provision from the period 2007, 8, 8, 9, 9, 10, 10, 11 வரைக்கும் provisional இருந்தது up to 12. Then instead of removing this, accounting standard board said let's make it permanent. So 46, para 46, 45, 46 talks about transitional provision to give a temporary interim relief for the companies. In para 46, we spoke only about companies. Then later, ASB introduced this in form of para 46A for non-companies also. Now they have made it permanent. Now made this permanent, which means I, as a company, as a non-company, if I have long-term foreign currency monetary item, I have two choices. Either I can opt para 13 and take that loss to the P&L, or I can opt para 46 if I'm a company, or 46A if I'm a non-company, and take it to the asset account if this is for depreciable asset. If it is for non-depreciable asset, take it to the foreign currency monetary item translation difference account, and then amortize it over a period of the life. Got it? Not got it? Hell no. This is a small kutti history of why this para 46 and 46A has come into picture. You go and ask any of your friends, nobody will know this because nobody is interested in this. All they know is 46A சொன்னா என்ன பண்ணோம், 13 சொன்னா என்ன பண்ணோம், அவ்வளவுதான். But tomorrow if you go for articleship, your boss is asking why para 46A came, what will you say? Don't know, sir. Pratik sir did not teach us. You're going to say like that? No. You had some doubt. Yes. Now he's telling that since company is exposed to such a risk, it should come into P&L. I agree. I do not deny. But by doing that, see, definitely by bringing the what do you call it, assets and liabilities at the closing rate, it reflects the true and fair picture, no doubt. But think about the other side, no. நீங்க வந்து ஒரு பேலன்ஸ் ஷீட் ட்ரூ அண்ட் ஃபேர் காமிக்கணும்னு சொல்லிட்டு ஃபினான்ஷியல் ஸ்டேட்மெண்ட் ட்ரூ அண்ட் ஃபேர் காமிக்கணும்னு சொல்லிட்டு P&L வந்து 150 கோடி ரூபாய் ஹிட் பண்ண வைக்கிறீங்க. இஸ் இட் நாட் அஃபெக்டிங் த சென்டிமெண்ட் ஆஃப் த இன்வெஸ்டர்? Is it not what do you call affecting the sentiment of the employee? If somebody is seeing the balance sheet with 150 crore loss, will his sentiment not get hurt? And because of this problem, what happened? Investors started withdrawing the money. No, our business is suffering. No, நீ வந்து உன் பேலன்ஸ் ஷீட் ட்ரூ அண்ட் ஃபேர் காமிக்கிறதுக்கு to ensure that your balance sheet is true and fair, you did this masala of AS11. Because of that, your business is getting spoiled. No, if business is not there, what will you do with the true and fair balance sheet, boss? Hence, at that point of time, the government back then felt that it is appropriate that we don't take it to the P&L, rather give an option. See, we are not telling that take it to asset account, take it to FCMITD account. It is an option given to company. If you want to take to P&L, you take it. But if you don't want, we have an option for you. Got it, not got it. Let me tell you one more thing. If any company is opting for para 46 or 46A, you can never go back to para 13. So it is only one way route. It is irrevocable. It is irrevocable. Such option exercised is irrevocable. Such option to be irrevocable. Got it, not got it. So once you apply para 46 or 46A, you can never go back to para 13. Para 13 to 46 you can come. But again, 46 to 13, you can never go back. So exercise that option, thinking 10 times. Got it, not got it. This is about subsequent recognition and the treatment of exchange difference on subsequent recognition. If this is clear, we'll go for a break. What is the time? It is 1:01. 1:10. We'll meet and do some questions based on this. Thank you so much. Yes, people, welcome back to the break. So let's continue. So now that we have discussed some theoretical points, let's implement them with the practical question. So illustration 2 from the ICA study mat. Those who have it, well and good. Others, you can see it from here. Can we start, people?
Yes.
Okay. So now the question says goods purchased. Goods is point A, B, C, D. Which point? We discussed in the beginning what is the meaning of foreign currency transaction. In that point number A, B, C, D. A stood for purchase and sale of goods and services. B was borrowing, lending and borrowing. Third was foreign forward exchange contract, which you don't know, I have not yet explained. Point number D is for asset liability. Okay. So they're talking about goods purchased on 1/1/2001 for $15,000. On this transaction date, the exchange rate is 75. So this is called as spot rate, spot exchange rate. The exchange rate on 31st March 2021 is 74 rupees. This is called as closing rate, closing exchange rate. Got it, not got it? Okay. Date of actual payment is 7/7/2021. So somebody asked me in the break that, sir, if payment is done, what is happening? I said, please wait for this question. So if payment is done on the date of payment, it is 73 rupees. So this is exchange rate on the payment date or on the date of payment. So we have 3 exchange rate. Got it, not got it? Spot rate is used for initial recognition. Closing rate is used for subsequent recognition. Payment rate is used for payment date. Got it, not got it? Now, you are required, not your teacher, you are required to ascertain the loss and gain to be recognized in the financial year ended 31st March 2021 and 22 as per AS11. What loss gain? Exchange difference loss gain. Foreign exchange difference loss gain is what you have to calculate. How will we do this, people? Extra we will do. Journalize all transaction. Got it, not got it? So with journal entry we'll do. Start. So if I go in the sequence, people, what is the first thing that is taking place? Goods purchased on 1/1/2001. So on 1/1/2001, no, 2021, What is the entry for purchase? Purchase account, DR stands for debtor, sir. Tell no. DR stands for debit to foreign creditor. If name is given, name I'll take. If not given, I'll put the category. What is it? Foreign creditor. So my first question to all of you, is this a foreign exchange transaction? Is this a foreign exchange transaction? Yes. How? Why this is, what is the meaning of foreign exchange transaction? Foreign exchange transaction is a transaction. After that, you say. Oh my God. Which is denominated in the foreign currency, where the settlement also will happen in the foreign currency. Okay. What is the calculation? If I make the payment today, how much payment should I make? $15. Dollar 15. But I don't have dollars. So in case if I buy dollars, what is $1 rate? Spot rate is 75. 15,000 into 75 rupees. Tell me what is the total purchase value in the reporting currency, INR. 11,25,000 is the translation. 11,25,000 is the translation. So AS11 teaches us how to do the translation of the foreign currency transaction. Any problem? Being goods purchased from the foreign creditor. Got it, not got it? Okay. Now my question to all of you, out of purchase and foreign creditor, which is foreign currency monetary item? Paji, which is foreign currency monetary item? For an item to be a foreign currency monetary item, 3 conditions has to be satisfied. One, it should be money held in form of foreign currency, or asset liability which is coming by virtue of foreign exchange transaction. And this should have a clearly fixed determined amount. Third, the settlement should happen in the foreign currency. So can I say all the 3 conditions for the foreign creditor is been satisfied? So this is called as a foreign currency monetary item. Okay, not okay? Okay. Once you decide that this is a foreign currency monetary item, what is the next step? Decide whether this is short term or long term. Date is not given. When date is not given, always debtor and creditor is assumed as short term, short term, short term. So this is short term foreign currency monetary item. Short term foreign currency monetary item. Got it, not got it? For short term foreign currency monetary item, always what para will be applied? Para 13 will be applied. What does para 13 says? If there is any exchange difference, if there is any foreign exchange difference arising in the event of subsequent recognition, it should be transferred to profit and loss account. Got it, not got it? Okay. This is called as initial recognition. Journal entry for initial recognition. Next is journal entry for subsequent recognition. On what day? On what date do we do subsequent recognition? On the balance sheet date. On the balance sheet date, please tell me what is the exchange rate? 74. Had you made the payment? Had you made the payment on transaction date? From your pocket, 75 per dollar would have been spent. Now on 31st March, if you make the payment, how much is the dollar rate? 74 rupees per dollar. So are you going to pay more or less? How much less? 1 rupee less. 1 rupee less. Got it, not got it? Tell no. Yes. So it is gain for you, loss for you. Yes. So upon subsequent recognition, it is giving birth to exchange difference gain. Foreign exchange difference gain. Debit all expense and losses, credit all income and gain. So to foreign exchange difference in bracket gain. And what should I debit? This will reduce my liability. So foreign creditor account debit to foreign exchange difference gain. How do I calculate it? See, total money that I need to pay is 15,000. How much is the difference that I'm saving? Closing rate is 74 minus 75. So 1 rupee I'm saving. So in total, how much? 15,000 rupees in total I'm saving. So my liability will reduce by 15,000, and that is a gain. Okay, not okay? This gain will be transferred to your profit and loss account. 31st March 2021. What is the closing entry? Foreign exchange difference account debit to P&L 15,000. So in the P&L, my foreign exchange difference will come on the credit side, means income side. Okay, not okay? Tell no. Online people. No response. Tell me fast. Okay, not okay. Comfortable? Okay. Sir, we'll stop here, sir. That's all. We'll go home. Boss, you cannot stop here. Of course, with this, the financial year end will happen. But the question further says that there is a date of payment on 7th July 21. Means after how many months? Almost after 3 or 4 months, we are actually making a payment of 73 rupees. Now, if I prepare a balance sheet, after the first entry, in the balance sheet, what is my foreign creditor value? 11 lakh 25,000. Got it? Because you have credited. Credit means plus. Now, if I prepare the balance sheet after my second entry, here the liability is debited. So from foreign creditor, 11 lakh 25,000, 15,000 is subtracted. So what is the balance foreign creditor value to be paid? 11 lakh 10,000. Okay. 11 lakh 10,000 rupees is the balance. Yes or no? So this is the true and fair picture of the creditor value. Now, on 7/7/21, you're making the payment. You can pass the entries in two ways. One, you can do the exchange difference entry, then payment entry, or you can do combined entry. So both I'll teach you. First, let's do the exchange difference. Now, on the date of payment, can we do the translation? On the date of payment, what is the exchange gain and loss? Sir, had I made the payment on 31st March, I would have paid 74 rupees per dollar. But actually, how much did I pay? Only 73 rupees. So how much did I save further? 1 rupee per dollar I have further saved. So again, can I say this is a gain for me? What is the entry going to be? Foreign creditor account debit to again exchange difference gain. Foreign exchange difference gain. Foreign exchange difference in bracket gain. How much am I gaining? 1 rupee. So $15,000 into 73 minus 74. How much is it in INR? 15,000 rupees. Got it? Not got it? This 15,000 will go where? To your P and L. This gain will go to your P and L. Got it? When? At the end of the year. All the closing entries pass at the end of the year. Now, can you tell me what is the balance of the foreign creditor? Sir, it was 11 lakh 10,000, sir. How, sir? See here, no? 11 lakh 10,000. Now, further 15,000 I'm minusing. Means what is the balance now? 10 lakh 95,000 is the amount that I'm finally going to settle, pay. Got it? Not got it? So what is the payment entry? On 7/7/21, what is the payment entry? Sir, from my bank account, money will go out. How much? 10 lakh 95,000. To whom? Banker. To my banker, who is an agent. Through him, dollars will be transferred to the foreign party. Got it? Not got it? So on the dollar வந்து என்னோட பேர்ல buy ஆயிடும். And on my behalf, he will remit the value. Got it? Not got it? For example, I'm making the payment from my account to one party sitting in Delhi. Who's making the payment? I give the payment to banker. Banker gives the payment to Delhi on my behalf. Got it? Not got it? In the same manner, this 10 lakh 95,000 I give to the banker. Banker will convert this into dollar, and on my behalf, he'll pay the dollar to the foreign party. Got it? Not got it? Tell no. Yes, 10 lakh 95,000 gone. With that liability also over. So foreign creditor account debit 10 lakh 95,000. Got it? Not got it? The moment I pass this entry in the balance sheet, the foreign creditor becomes zero. Foreign creditor becomes zero. Clear or not clear? Tell no. All of you, open your mouth and respond, online people. Correct? Yes? Okay.
Yes.
In textbook at certain places, what they've done is, ரெண்டு combine பண்ணி entry போட்டிருக்காங்க. So do you know how to combine the entries? Do you know how to combine the entry? Yes. So now, foreign creditor in debit how much? 15,000. Foreign creditor in debit how much? 10 lakh 95,000. If I add both, how much it is? 11 lakh 15,000, or 10,000. Okay. So foreign creditor account debit 11 lakh 10,000, which is nothing but the previous balance sheet amount after the subsequent recognition. 1110. Okay, wow. 2. In the 1110, in this 1110, are you going to pay full 1110? No. How much are you going to pay? 10 lakh 95,000. So to bank 10 lakh 95,000. The money what you're not going to pay, which is 15,000, is nothing but your to foreign exchange difference gain. So this credit part and this credit part will copy paste as it is. Merging of the entries since 11th I'm teaching. At interlevel if I have to teach அப்படின்னா ரொம்ப கஷ்டமா இருக்கு எனக்கு. This is the entry. In some questions directly they pass, which is a combination of the above two entries. Got it, not got it. Now this foreign exchange difference at the end of the year, 31st March 22, always the closing entry is passed at the end of the year, will be transferred to P&L account. So foreign exchange difference account debit to P&L account 15,000, 15,000. So this is the foreign exchange difference gain resulting out of payment, not subsequent recognition. Subsequent recognition where a gain on the already it is transferred to P&L in the previous financial year. This is the gain resulting on the payment, settlement. This is the settlement ka gain. So one foreign exchange gain and loss will come on the subsequent recognition. Another gain and loss will come in the settlement period. Got it, not got it. Both exchange difference and losses will go to your profit and loss account for short-term foreign currency monetary item. Got it, not got it. Tell no. Any difficulty? What is the question asking? You are required to ascertain the loss and gain to be recognized in the financial year 31st March 21 and 22. What is the answer for 21? There's a foreign exchange gain of 15,000 in year 31st March 21 because of subsequent recognition. 31st March 22, what is the gain? What is the exchange gain? 15,000, which is resulting because of settlement, payment. Got it, not got it. 15,000 rupees should be credited to P&L account for the year ended 31st March 21. And then 51,000 will be credited to P&L account at 31st March 2002 upon payment. Got it, not got it. Not got it? If you say not got it, full illustration too from beginning I'll explain. எனக்கு தெம்பு இருக்கு, உனக்கு கேட்க தெம்பு இருக்கா? இல்ல ஆன்சர் பண்ணுங்க. I am capable of doing all that. 10 times I can repeat, I have no problem. Do you have the guts to listen to me? Is the challenge here. Which notes? Whiteboard. Okay. Entries, please copy paste. Those who don't have brains. Over? Brains came, huh? Oh. Okay. Game over? All of you noted down? Hey, I told for joke, yeah? Whether you have brain or no brain, please copy paste. No problem. It's okay. To ensure, yes. फालतू का नहीं है ना. 31st मार्च को अगर होता तो क्या होता? 31st मार्च को बेचने वाला होना चाहिए ना फिर. नहीं मिला तो? I want laptop today. Will I wait for 31st March for that? Now, see, I don't want to do one entry on purchase date, one more entry on the closing date. So I will not purchase from 1 April to 30 March. I will not purchase. 31st March I will purchase. So that your closing rate, spot rate, both are same. If both are same, no exchange difference. Like that she is telling to do. In a camera, today is what? 15th July 2026. Will I wait till 31st March 2007? Sorry, 27? That time price will go up. The person will not sell to the camera to me. Any problem can happen. So what you're saying is not practically possible. Now, illustration 3. Kalim Limited. Company. Listed, unlisted. Unlisted. Listed or unlisted? Listed na, wo syllabus la varuma. Listed company enna applicable? Ind AS. Will it come in intermediate level? No. So this is unlisted public company. Got it, not got it? Tell no. So it is satisfying all the conditions of either SMC or non-SMCs. Clear or not clear? Okay. Kalim Limited borrowed US. Oh, borrowed. B part, borrowed US dollar 450 lakhs. 4 lakh, sorry, 4 lakh 50,000 US dollars. I'm so sorry. 4 lakh 50,000 US dollars on 1 month 2021. This X is always 21 for us. Okay, wow. I don't know what fun ICA's got us to remind about X all the time. Anyways, Kalim Limited borrowed US dollar 4,50,000 on 1 month 2001, which will be repaid as on 31 July 2001. Tell me, people, which financial year this is? Okay, Kalim Limited prepares the financial statement ending 31st March 2001. Okay, so it is April to March. April to March. When did we borrow, people? When did we borrow? When did we borrow? This is 2020, 21, 21, 22. Okay, wow. Okay. 1 1 2021 falls in which financial year? 2021. So 1 1 21 date of transaction. Date of transaction. Spot rate I need here. Yes or no? Okay. When am I going to repay this? 31 July 21. Okay. Either short term or long term paklama. To calculate short term, long term, what does AS11 says? From the transaction date, calculate 12 months. So 12 months gets over where? 1 1 22. When am I making the payment? 31 July 21. Somewhere here. 31 July 21. Since payment is made within 12 months of transaction date, so this becomes short-term foreign currency monetary item. Got it, not got it. Comfortable, all of you? Okay. Video on online people. Video. Okay. Rate of exchange between reporting currency and foreign currency on different dates is as under. 1 1 2001 is nothing but spot rate. Yes or no? 31st March 2001 is the closing rate. 31 July is the settlement rate. Okay, not okay. Any problem? Any problem? If it is short-term foreign currency monetary item, can I opt for para 46 or 46A? No. Always for short-term it is para 13, which is transfer the foreign exchange difference to the profit and loss account. What are they asking? What is the requirement? Nothing given. Oh my God. Pray to God such a question should not come in exam. So, journalize. Write it down. Oh, journal entries only they have asked. Journal entry only they have asked. Let's do it. You will do or I'll do? Both will do? Okay. Tell the date of transaction. 1 1 21. What entry? Bank account to foreign bank loan. Have they given any interest percentage? No. हाँ तो लोन क्या फोकट में देगा देखो इंटरेस्ट ऑल्सो विल कम इन दिस ನಮ್ಮ ಊಟಕಾಸ ಯಾರು ಊಟಕಾಸೆ ಇಂಟ್ರೆಸ್ಟ್ ಇல்லாம கொடுக்கிறதுக்கு ಬ್ಯಾಂಕ್ ಅಕೌಂಟ್ ಡೆಬಿಟ್ ಟು ಫಾರೆನ್ ಬ್ಯಾಂಕ್ loan account. You have taken the loan in US dollars. Can I record 4,50,000? Can I record 4,50,000? Not possible because this is foreign currency. You cannot prepare the financial statement with the foreign currency. You have to prepare the financial statement in the reporting currency. Reporting currency in India is INR. Hence, we have to convert this into INR. Who says this? Accounting Standard 11 says how to translate the foreign currency into reporting currency. So dollar 4,50,000 multiplied by what is the spot rate? 48 into 48. How much? It is going in crores. 2 crore? 1.6. Only. 2 crore 16 lakhs only. என்னை பார்த்த லோன் எடுக்கிற பாட்டி தெரியுதா 2 crore 16 lakhs. That I'll tell. We have question based on that also. Now, in the narration will manage, no? Okay. After this, if I go in sequence, what is the next date? After this, if I go in sequence, next is 31st March. Upper closing date, we have to do subsequent recognition. This is initial recognition. Next is subsequent recognition on 31st March 21. Tell me, people, I have to repay the loan. Okay, I have to repay the loan. இன்னிக்கே வாங்கி இன்னிக்கே repay பண்ணா 48 rupees per dollar. If I repay on 31st March, I have to pay 1 rupee extra. Extra means loss. So what is entry? Okay, before that. Oh, wait. First of all, subsequent recognition should be done for whom? Foreign currency monetary item. Which is the foreign currency monetary item? Foreign bank loan is a monetary item. Why? First, it is a liability. Second, how much money should I pay? Exactly determined, which is $450,000. Whenever I repay in future, I should repay in foreign currency. Appadina dollar. Appo this is a foreign currency monetary item. Sir, bank 2 crore 16 lakh. Is it a foreign currency monetary item? This bank is Indian bank. Got it, not got it. So in that, money is there in INR. It is not a foreign currency bank. Got it, not got it. So bank is not a foreign currency monetary item in this case. Clear or not clear? Since this is a foreign currency monetary item, it is subject to subsequent recognition. Now, upon subsequent recognition, there is a loss. So what is entry? Foreign exchange difference, in bracket, loss, account, debit. 2. Why this is loss? Because if I have to repay money, I have to repay more. To whom? Banker. Upon this foreign exchange loss is increasing my liability. So to foreign bank loan. To foreign bank loan. How much extra I have to repay? ஒரு வேளை 31st March repay பண்ணீனா, how much extra I have to repay? $450,000 multiplied by 49 minus 48. So 1 rupee per dollar extra I have to pay. So how much it is? 450,000 rupees extra I have to pay. So my liability will increase by 450,000 rupees. Got it? Not got it? Sir, directly we can go to payment date, sir. Directly we can go to payment date. 31st March 21 க்கு closing entry pass பண்ணணும். So 31st March 21, what is the closing rate? Sorry, what is the closing entry? Very good. P&L account debit 2. Please understand, this is a company. So don't write trading and profit and loss account income. It is company. For company, we prepare statement of P&L. So P&L will come. 2. Foreign exchange difference loss account. 450,000. 450,000. Okay, not okay. With this financial year over, not question. With this financial year over. Now, on the date of payment, 31 July 21. Tell me, people, combined entry or separate entry? What do you want? Combined entry. Okay. On this date, I have to repay the bank loan. When I repay the bank loan, my liability will get over. How much is my liability? How much is my liability? So 2 crore 16 lakh plus 450,000. Both if I add, this is my actual liability to the party. How much it is? 2 crore 20 lakh 50,000. So to create liability, credit. To close liability, debit. So foreign bank loan account debit. How much did you say? 2 crore? 20 lakh 50,000. Okay, not okay. This is the closure of liability. From bank, how much money will I actually pay? From bank, how much money should I actually pay? $450,000 multiplied by, what is the payment rate? 49.5. Extra 50 paise I have to pay. So into 49.50 full எடுக்கணும். Payment பண்ணும்போது from bank, how much money will go? $450,000 multiplied by 49.5. This is payment in dollars multiplied by payment per USD dollar. So how much money will you pay? 2 crore 75,000. In fact, you can do this calculation here itself. So $450,000 multiplied by 49.5. இது இங்கே பண்ணிடுங்க. You're supposed to pay how much? 2 crore 20 lakh 50,000. You're supposed to pay. It's our liability. How much you're paying? 2 crore 22 lakh 75,000. How much extra you paid? 2 lakh 25,000 you paid extra. That is your gain or loss? Loss. Debit all expense and losses. Apana foreign exchange difference in bracket loss account debit. How much is the difference? 2 lakh 25,000 is the extra amount. This is balancing figure. This is combined entry. Combined entry. Those who are not comfortable with combined entry, you can put the separate split entry. In that case, what happens? First, revalue the liability at the payment rate. In that case, what entry will come? Exchange difference to foreign bank loan, the entry will come for 2,25,000, 2,25,000. Now, when you make the payment, what is the entry? Foreign bank loan to bank. How much? 2,22,75,000. Sorry. 2 crore 22 lakh 75,000. 2 crore 22 lakh 75,000. Panituma entry. I'll do it. Okay. Or separate entry. How will you do it? First, do the translation. So because of translation, what is exchange difference loss? Foreign exchange difference account debit. How much? 4,50,000 into 0.5. How 0.5, sir? 49 நீங்க restate பண்ணிட்டீங்க. 49 to 49.5. How much extra you have to pay? 50 paise extra you have to pay. Got it? Not got it. So this is 49.5 minus 49. So 2 lakh 25,000. So this loss will increase my liability towards the foreign bank loan. 2 lakh 25,000. Now what is your foreign bank loan liability? 2 crore 16 lakh plus 4 lakh 50,000 plus 2 lakh 25,000. All the three please add. 2 crore 22 lakh 75,000. So now when I make the payment on the settlement date, foreign bank loan account debit 2 crore 22 lakh 75,000, and from bank the same amount will go 2 crore 22 lakh 75,000. So this is first record the exchange difference. Because of this, your liability will change. In this case, liability is further increasing, and that you are making the payment. So these two are the separate entries. This combined பண்ணீங்கன்னா this entry will come. So this is the combined compound journal entry. Compound journal entry. And this is simple journal entry. Okay, not okay. In some textbooks, that is in some ICA is done simple separate entries. In some textbook, in some entries, questions, they've done combined. Got it, not got it. Okay, ma'am. Now, next is what, people? Sir, 31st March 22, 31st March 22, end of the year, this loss should be transferred to the P&L. What is the transfer entry? P&L account debit to foreign exchange difference 2,25,000, 2,25,000. Got it, not got it. Now here they wouldn't have done the closing entry. You do an exam income. Got it? They have not done it. You do it. So this is Jan 1 loan வாங்கின டேட்டுக்கு entry. This is 31st March foreign exchange difference entry. Closing entry of 450 they have not passed. You pass. Then this is settlement entry. Combined entry பண்ணிருக்காங்க. Then one more closing entry will come for 225 loss transfer. That they have not done it. You do it. So மொத்தம் எவ்வளோ entry? 5 entry. In that only they have done 3. 2 entry what they have not done. And the P&L transfer entry இருக்குல்ல closing entry that they have not done. You have to do it. Got it, not got it. Which grade? Oh, it's not July 31. It's July 1 now. Guys, come back here and change. It is. So 31 is the correct data. Donkey people. This is not July 31. Not you. अब आदत पड़ गई क्या करें? Now July 31. July 31. Now the next which question, sir? Not 5, not 6, not 7. We will do 8. 8 only, no? What is the time? 1:50. Instead 9 is a better option, I think. We'll do 9 first. Or 8. Nine will do. Because in 9, they're telling option para 46A not availed, 46A availed. If the finance is for other than depreciable asset, then what to do? அப்படின்னு கேட்டிருக்காங்க. ஓகேவா? So we'll take this question. So all the different cases will get covered in this. With this question, we'll wind up today's class. A Limited company has borrowed US dollar 10,000 in foreign currency on April 1, 2021 at 5% per annum. Lakshita, listen to this. Loan is given with interest only. 5% per annum. Annual interest and acquired a depreciable asset. So here, this foreign currency transaction is happening because of purchasing a depreciable asset. Depreciable asset. Remember, for this para 46A option is available. Para 46 option is available. Only to buy this asset, we have taken a foreign loan. To buy the asset, we have taken a foreign loan. The exchange rate is as under. On 1/4/2021 means on the date of borrowing the loan. And we're assuming on the same date asset is purchased. Exchange rate is 48. Above this is spot rate. 31st March, the dollar rate is 51, which is closing rate. You are required to pass the journal entries in the following case. What following case? Option under para 46A is not availed. Not availed. Then what to do? If availed, then what to do? Third option says that in case the loan was taken to finance the operation, not to finance the asset, to finance the operation, means other than depreciable asset, other than foreign currency monetary item, other than depreciable asset, then what will happen? அப்படின்னு கேட்டிருக்காங்க. ஓகேவா? Tell no. Can we do it? What are they asking? Journal entries. Close your eyes and tell me, what is the first entry that I record? First is the bank loan entry. So first entry is for taking the bank loan. What is the language saying? Borrowed money, they're telling. Borrowed money means money will come to our bank account and using that money I purchase the asset. Got it? Not got it? So first is borrowing entry. Second is asset purchase entry. Got it? Not got it? Asset purchase entry skip pannalam if you want, because they've not asked the asset purchase entry. They are telling you to pass the journal entries only with regard to these options. So purchase entry is optional. But I am doubtful that in exam key answer, whether the journal entry for asset is done or not done, I don't know. So to be on safer side, what will I do? Pass the entry and come. Got it? Not got it? Tell no. So tell me people, what is the entry? First entry. 1/1/21. 1/4/21. I'm so sorry. I'm so sorry, ma. 1/4/21. I've taken a bank loan. So money comes to my bank account. So bank account debit to 5% foreign bank loan. To 5% foreign bank loan account. Any problem? How much loan is borrowed? $10,000. I cannot record it because it is in the foreign denomination. So I have to translate it into the reporting currency. So $10,000 into 48 rupees. So $10,000 into 48, 4,80,000. Chiller amount. From crore we came to lakh. Sthiti SEA. Now, on the same date, we are assuming that the asset is purchased. What is entry for purchase of machine? Machine only, no? Depreciable asset they're telling. Okay. So asset account debit to bank 4,80,000. 4,80,000. Got it? Not got it? After this, directly I'll go to the year end for getting the exchange difference. But out of these entries, of these items, which is my foreign currency monetary item? Because subsequent recognition should be done only for the foreign currency monetary item. In this, only this is foreign currency monetary item. It is a liability. Amount to repay in future, $10,000 is fixed. And I repay only in the foreign currency. Since all the three conditions satisfied, this is a foreign currency monetary item. Got it? Not got it? Now, short term, long term, don't think. Because I've told, if para 46A applied, 46A, 46 applied only for long term. So you don't have to apply your mind whether it's long term or short term. Avane decide panni soltam. If this para is taken, what to do? If that para is taken, what to do? They are telling. Okay, va. So long term nanishna in the summer podrom. Considering long term, we'll do this question. Now, had I made the repayment on 1/4 itself, I would have paid 48 rupees per dollar. Now on 31st March, 1 year later, if I have to pay money, means how much dollar extra I have to pay? From 48 to 51, how much dollar extra I have to pay? 3 rupees per dollar extra I have to buy at the dollars and pay. So how much is my loss? 3 rupee per dollar is loss. How much dollars? $10,000 into 3 rupees. So what is my exchange difference loss? 30,000. So on 31st March 22, foreign exchange difference in bracket loss account debit. Now this loss will increase your foreign currency monetary item, which is that here bank loan account. So to 5% foreign bank loan account. Calculation is $10,000 into 51 minus 48, which is 30,000 and 30,000. Any difficulty so far? Now the question is, what will I do with this exchange difference? With the foreign exchange difference, what should I do? So in all the three scenario, the initial 1, 2, 3 entry is going to be same. From now, what entry I'm going to do is going to be difference. But before that, can we pass one more entry? Interest entry will come, no? In all the case, assume interest is accrued on 31st March 2022. Is paid on the same date. It is paid on the same date. So tell me people, what is the entry for interest accrued and paid? So year end 31st March 22. The question says that in all the cases, assume interest is accrued on 31st March 22 and paid on the same date. So 31st March and the interest ni kattano. Ni kattita. So what is entry? Interest expenditure to bank. Interest on 5% foreign bank loan account debit. If you can put interest also, it is fine. Nothing wrong. I like this. To bank. I be very specific. How is the calculation, people? Tell me. Very difficult. Yeah. You tell me. How to do the calculation for interest? 4,80,000 pay less plus interest. So donkey fellow, she's telling that on 4,80,000, I'll multiply 5%. Wrong. Or wrong. Yes. Always interest is calculated on the dollars. You have taken the loan on dollars. So calculation will be on dollars only. So $10,000 into 5%. How much is interest? This for the entire year. 1 April to 31st March. I have taken this money for the entire 12 months. How much is the interest per annum in dollars? Sorry? 500. Okay. Multiply with the spot rate on the date of payment. So lucky people you are. 31st March is date of payment. So payment rate, closing rate, spot rate, all three is 51 rupees. So for interest, will I do any exchange difference? No. Imagine, had the interest been accrued on 1st of March, then for March month, closing 31st March, we are supposed to do the translation of exchange difference. Got it, not got it. Based on that, we have questions. We'll discuss in the upcoming sessions. Yes. Lucky fellow you are. Spot rate, closing rate, payment rate, all three is happening on same date. So there is no subsequent recognition for interest payable because interest payable is a foreign currency monetary item. It has to be subsequently recognized. Ana, initial recognition, subsequent recognition, both are happening on same date. So there is no foreign exchange difference. Into 51, how much people? 25, 500. 25, 500. This interest is a nominal account. Can I transfer to P&L? Yes. So what is the closing entry? 31st March 22. P&L account debit. Where in P&L? Finance cost. Very good. All of you have done schedule 3. So all the borrowing related cost will go to your finance cost in schedule 3 P&L. Account debit 25,500 to interest on 5% foreign bank loan account. 25,500. Tell me people, how many entries so far? 1, 2, 3, 4, 5. For counting this itself, people are making mistake abdina. Then I should send you with my son's school, UKG. They're teaching now counting 1, 2, 3, 4, 5. Now listen. For all the three scenarios, these 5 entries are going to be same, puppy, same. Got it, not got it? Now, 3 options from here. Who's whistling? Option A. What is option A? Option under para 46 is not availed. Para 46 not availed means para 13 availed. In that case, the foreign exchange difference will go to your profit and loss account. So my 6th entry. What is entry? It's a loss or gain? Loss, no. So P and L account debit to foreign exchange difference bracket loss. How much it is? 30,000. This one, 30,000. Any problem? Online people, video madi on. Fast. Any difficulty? No difficulty. Comfortable? Okay. What is the next point saying? Option under para 46A is availed. Para 46A availed. Para 46A availed. Now the question is this foreign currency monetary item, which is foreign bank loan, is it for a depreciable asset or is it for other than depreciable asset? It is for depreciable asset. Make a note. It is okay. Wait. Foreign currency monetary item, which is foreign bank loan, is taken for depreciable asset. Make a note of this. In that case, what is my 6th entry going to be? Exchange difference is currently in debit. Exchange difference is currently in debit. I have to transfer it to the asset. Now, what is entry going to be? Asset account debit to foreign exchange difference loss account. So here, the asset balance is increasing 30,000. Now here you will have a confusion. Listen now. You will get confused with what you know. Sir, loss on sale of asset in the AS10 in intermediate level or in foundation or in 11th standard, I said that losses will always reduce asset. Gain will always increase asset. Purida. That is only when you sell the asset. This exchange loss is a expenditure item. ನೀವು machinery வந்து extra செலவு பண்றேன்னு அர்த்தம். Got it, not got it? I'm buying one machinery. How much I'm supposed to make the payment? 4,80,000. How much I'm supposed to make the payment? 4,80,000. Because of delay in the payment, I have to pay an extra 30,000 rupees for the same asset. So this delay is resulting into a loss. This loss reflects into extra payment for the machinery. So extra loss that is arising in the event of subsequent recognition should be debited to the asset account. Losses will increase the value of the asset in case of AS11 because this is as a expenditure. நீ அதிகமா pay பண்ற. Had you made the payment today itself on the date of purchase, the exchange value would have been how much? 480 only. But since you are not making the payment now, you're making the payment on the balance sheet date. Apni assume panna, how much extra is supposed to pay? 30,000 extra is supposed to pay. So asset value will increase by 30,000. Got it? Not got it? Tell no. So asset account debit to foreign exchange difference loss. So your liability increased by 30,000 and asset increased. Sorry, not liability. This is the loss closing. இது வந்து credit பண்ண உடனே the moment I credit this, the foreign exchange difference loss ka ledger will close and that amount is getting added where? In the asset account. Got it? Not got it? Yes, ma. This is not the violation of what? Okay. Got it. Got it. Now she is asking, is it not a violation of accounting standard 10? So basically, those who have not done accounting standard 10, accounting standard 10 talks about revaluation of asset. This you have studied in the foundation, 12th also. In partnership topic, I'm talking to new people. In 12th standard partnership, did you do revaluation? New people. In 12th standard foundation, did you do partnership? नहीं यार blank இருக்கீங்க எல்லாருமே இருக்கீங்களா right. In that, we have taught you what is revaluation. Means what? Increase or decrease in value of asset. Correct? So who suggests us to do the revaluation? Accounting standard 10 says that you can do the revaluation of the assets. Means what? Increase or decrease in the value of the asset based on the market value. For example, in my books, the value of the asset is 1 lakh. But the fair value of the asset in the market, I'll get 1,20,000. So how much is extra? 20,000. So that 20,000 rupees, you can add it to the asset and increase the value. This is called as revaluation. When you do AS10, you'll understand in depth. In the question, AS11 sambandham illa. Since she's asking, I'm just taking this as an opportunity to explain. She's telling that this 30,000 foreign exchange difference loss is increasing the value of the asset. So is it called as revaluation? The answer is no. Please understand. AS11 is specifically saying that upon a foreign exchange difference coming in case of depreciable asset, you have to add it to the cost of the asset. So in that case, accounting standard 11 will prevail over accounting standard 10 because it is a more specific instruction given by a standard. Got it? Not got it? And moreover, this is not a revaluation of the asset. AS11 says that since you are making the payment in delayed manner, that is aggravating the value of the asset. So what you're saying is correct only to one extent. AS10 says that once the asset is ready for use, capitalize the asset. But AS11 is giving you more power. After capitalization, if there is any foreign exchange difference loss, I am permitting you capitalize. So AS11 here becomes more powerful than AS7 with this regard. In the point mattum, AS11 will supersede AS10. Got it? Not got it? So we have studied, when you're studying some ASs, they'll tell that some AS will have specific superseding power than the other AS. So in this AS, who is superseding? Who's empowering? AS11 is empowering AS10. So what AS11 says, you have to listen. AS10 has to be quiet. Got it? Not got it? Now, in case of foreign exchange difference loss, it is like expenditure, additional expenditure doing for the asset. So that will increase the cost of the asset. If there is any foreign exchange gain, that will decrease the value of the asset. Got it? Not got it? Tell no. Purida. Don't confuse this with the gain or loss on sale of asset. That is different. This is different. Don't get confused. Always remember in AS11, foreign exchange difference loss will increase the value of the asset. Foreign exchange difference gain will decrease the value of the asset. Got it? Not got it? Clear? Okay. This is the sixth entry. This is the sixth entry. Now, what is point number C telling? What is point number C telling? Point number C is telling that the loan was taken to finance the operation of the entity and not to procure the depreciable asset. But the question is not telling whether para 46 is availed or not availed. So I'm again doing two options here. Para 46A not availed. What entry will come? Transfer to P and L. Transfer to P and L. Got it? Not got it? This is in case of foreign currency monetary item, which is foreign bank loan taken for other than depreciable asset. Any problem? Once again, ma. Next is, இதான் example கேட்டிருக்கான். This point they have asked. Point number C. Can I make this point D rather? இது எக்ஸ்ட்ரா நான் ஒர்க் அவுட் பண்ணிருக்கேன் உனக்காக. This is point D. What is point C telling? Point C telling if para 46A availed the foreign currency monetary item, which is nothing but foreign bank loan, is taken for other than depreciable asset. 46A எடுத்துட்டீங்க அப்படின்னா ஒன்னா, if you take 46A, one either it will go to asset or go to foreign currency monetary item translation difference account, புரியுதா? Or it go to cost of asset. Cost of asset already transferred. Depreciable asset means it goes to the asset. For non-depreciable asset means if it goes to FCMITD account. What is entry? Sixth entry. FCMITD account debit to exchange difference, foreign exchange difference in bracket loss. This is the nominal account. In the nominal account, I'll close it and transfer it to the foreign currency monetary item translation difference account. This is a deferred revenue expenditure. This is a deferred revenue expenditure. I will defer this 30,000 over a period of the life of the loan. Over a period of the life of the loan. If loan is repaid in 5 years means I'll depreciate this or split this over a period of 5 years. Got it, not got it? Now, fully. Para 46A not availed means para 13 availed. Transfer to P&L. Here also, para 46A not availed, taken for other than depreciable asset, transferred to P&L. This is for depreciable asset. This is for depreciable asset. Depreciable asset. A is for depreciable asset. D is for non-depreciable asset. For depreciable asset, non-depreciable asset, if para 13 applied, both will go to P&L. Got it, not got it? Para 46A availed for depreciable asset. So the foreign exchange difference will go to your asset account. If it is for non-depreciable asset, then foreign exchange difference will go to your FCMITD account. Clear or not clear? See, they have not passed the closing entry. Don't worry. In exam, you pass the closing entry income. This is bank loan taken entry. Asset purchase entry, they have not recorded. Interest entry. Interest closing entry, they have not recorded. We have recorded. Interest or closing entry also, they have not recorded. We have recorded. And this is exchange difference account, which is 30,000. Got it, not got it? In this case, since option under para 46 is not availed, the exchange loss is recognized as expense in the statement of P&L. This is first option. Case A, para 13 applied. In case option para 46A is availed, then that exchange loss is transferred to PPE account, that is asset account. Asset account. நம்ம asset போட்டிருக்கோம், அது PPE. Got it, not got it? Under third option, para 46A is availed, but it is for other than depreciable asset. Then where is it going to? FCMITD account debit to foreign exchange difference account. Got it, not got it? In this case, since the option under para 46A is availed for non-depreciable asset, the exchange loss 30,000 is accumulated in FCMITD account, which will be subsequently spread over and debited to P&L over the tenure of the loan. Upon this FCMITD account is a deferred revenue expenditure, which I'll amortize over a period of tenure of the loan. நீங்க கேட்டீங்க இல்லையா, இந்த 30,000 என்ன பண்ணணும்? Over the life of the loan of the asset, tenure of the loan of the asset, this 30,000 will get amortized in the P&L every year. So 30,000 divided by 5 years அப்படின்னா how much per year? How much per year? 6,000, 6,000, 6,000. I'll amortize to the P&L. Clear or not clear? The student are advised to refer full text of AS 11. This is a standard dialogue after every chapter. Which means what? I have given to my level best all the concepts in question. இது தாண்டி கூட கொஸ்டின் வரலாம், அதுக்கு நீங்க AS 11 படிச்சுக்கோங்க அப்படின்ட்டாங்க. That is what I am doing for you, no? You don't take stress. I'll take care of it. Okay, not okay. Another 1 more hour is required for me to complete the foreign exchange transaction. If that is done, in the next class itself we'll begin the next topic, which is forward exchange contract. Right? Then 1 more topic is left, which is foreign operations. So in another 2 to 3 classes, we'll be done with accounting standard level. Okay. Somebody called me. Yes. Note. Which note? My whiteboard. Okay. Don't scold. Which one? A, B, C, D. That's all. Can I wind up? Anybody's got doubt? Guys, once again. Shh. Silence. Shh. Yes, Lakshana. Ama. She's asking, should we start writing off from this year? Yes. But they have not asked, so I didn't pass the entry. In the write off, can we do it from the current year? Yes. So what is the 7th entry going to be? P&L account debit to foreign currency monetary translation difference account 6,000. So from this, I'll transfer to P&L every year from today onwards, from this year onwards. Okay. Hello guys, that's all from my side for this session. I will see you all in the next class when I don't know. Until then, bye-bye. See you. Take care. Thank you so much.